A very good morning to you all. Trade Live with IG on Wednesday, the 6th of August.
Thank you very much for having me, Rich. How are you?
Big Luke.
I thought it was Luke Senior we agreed.
Luke Senior.
Yeah.
Did we go with Luke
Is
Senior?
that okay?
We went through, because Luke Moore has not been on the show. Luke who? He's not been on the show for weeks. He's off holidaying in Aberdeen, isn't he?
He's always on holiday, Luke is. However, I believe he's on the show next Wednesday from memory from our group chat.
All right, well, you are Luke Senior until then, at least. A beautiful day in London. Look at those blue skies, the sun shining in the background. Oh, no, sorry, I've got the wrong picture on my screen. It is meant to be nice later, 24 degrees.
It's meant to be a nice week. Like average, like 23, 24 degrees. Not as hot as the heat wave we had earlier in the summer, but it will do.
A couple of vinos with the lads.
We can't complain.
You used the nice weekend at the weather, didn't you, for go on a little hike?
Well, I wouldn't say a hike. I went walking around London. I was quite proud due to the fact that I ended up walking 15 miles on Saturday, which is around 33,000 steps. So my legs were killing me on Sunday.
Where do you start and where do you go?
Where did I start?
Where did you come from, Cotton Joe?
I started around Buckingham Palace area and I just walked like Oxford Street, Bond Street, Piccadilly Circus, Hyde Park, and then back to Bermondsey.
Is this with your nan?
No, my nan can't walk that far. How old's my nan? She's 86. She's 86, so she's too old. She's too old to walk that far. Yeah, good age.
Yeah. But how many steps in total was that then?
33,000.
I think I've done 33,000 once, and that was on a proper hike in Austria.
Proper hike?
Yeah, proper hike, as in you go up.
Yeah.
Not just up Bond Street. Well, that would be some people's idea of absolute hell, walking around on a busy Saturday afternoon.
No, my average count for the year, the average over the past 12 months is 6 miles.
So what's your average steps per day?
Should be
year to date. Let's find out. This is a number I
haven't got my phone on me, but I believe it's just over 13,000.
13, is it really? Mine's 10,200.
That's good. It's better than 10,000, right?
It's good. Yours is 13,000.
Yeah, but it's better than 10,000. 10,000 is a benchmark.
Yeah, that's true.
Right?
Yeah. Right, what's coming up on today's show? We got myself and Luke Cooper looking at Uber numbers, Snap numbers, Caterpillar numbers, and we've got previews for Disney and McDonald's coming up as well as AMD, of course. Chris Bouchon comes in at 8:35. He's going to be charting crypto. And what else we got, Minnie?
And then at 9, we have got the all sessions opening bell with Ange. 9:10, we have the Expert Edge, again with Ange and Dylan. And then finally at 9:35, we have Decoding Crypto, episode 4 with Ryan Grace.
That's right, the queen of the show is back, Angeline, to the rapturous applause of her trader friends.
Rapturous? What does that mean? I've never heard that word.
Rapturous.
Rapturous.
So to break out in a rapture of applause.
Oh, okay.
Is what, when you were walking around Bond Street, that's what everybody would have been doing.
I don't think so.
Right, let's go into some overnight action. So AMD reported its second quarter results after the bell last night, missing its EPS numbers but beating analysts' expectations on revenue. The company also provided better than anticipated Q3 guidance of between 8.4 and 9 billion. Wall Street, right in the middle of that. Wall Street was expecting 8.3 billion. So a nice beat there, but it was not good enough because, of course, the stock has run so much into numbers that this was a disappointment, down as much as 6% at one stage. Despite the strong outlook, the company's shares, remember, were up 44% year to date and 29% over the past 12 months. So stocks in Asia of the chip makers have suffered overnight. And we also saw a bit of weakness in some names yesterday, didn't we, Minnie?
Yeah, on AMD, is that okay if we just bring up the price chart? It shows it was down on the day yesterday overall, 7.59%.
Let's get that up for you in a second.
So yeah, like you said, unfortunately down on the day. That's due to the fact since their April lows, because they hit their low in April when obviously Trump and all his tariffs rubbish. Since then, they have done pretty well. The thing is with AMD, China is of course a significant market for AMD, and Trump obviously doesn't want the likes of AMD, Nvidia sending their most advanced chips to China. So yes, I've got a statistic here. Exactly. So in 2024, China generated $6.23 billion in revenue for AMD, accounting for over 24% of the company's total sales. This makes AMD's second largest market after the US, which contributed 33.71% of total revenue last year. So big market for AMD.
Big market, but you can see, you know, I mean, this sell-off is basically just bringing them back to earth a little bit. We've, if we look at when they were last here, it was on the 25th of July. So we've got, you know, the sell-off is a sort of 2-week snapback. Let's look at where they are on the year chart. Not playing ball today.
Still up a lot.
Look at that.
Yeah, still very, very impressive.
So yeah, strength there in AMD. We knew they were strong going into it, and to be honest, this is kind of what I expected Palantir to be the day before.
But it was a complete opposite.
Complete opposite. Ooh, I've gone big on Palantir now, though. You'll see here from the chart, we've now tripled the size of the short, and yeah, there we go. So you can see I shorted more on 1 p.m. We set that order actually in the show yesterday. That was the short at 171.36. And then, oh, has he top ticked them? Is that the top tick of the day, Minnie? Managed to short another 80 shares at 175.64. I kind of got away with it elsewhere because I'm short the 185 August calls.
Right.
So they've all compressed in those.
Yeah.
And they become basically worthless.
I mean, lately with Palantir over the past 2-3 years, they've literally almost always beat earnings. Palantir have.
Shock.
Yeah, with Palantir, AMD, their performance compared to the rest of the S&P 500, well, the average stock is so much greater, so much greater.
And the valuation, 600 times earnings. Right, let's say hi to everybody on the chat. Kate Murphy is with us, nice and early. Normally a long lie, isn't it, Kate? You must be expecting Rolls Royce to be up again today. Marco Polo, good morning. Boise's in. Boston Frank, 18 Celsius in Boston. Now, is that proper? No, 18 Celsius is not the proper measure, is it?
What do you mean? You mean Fahrenheit?
Yeah.
What do you mean not the proper measure?
Well, that's equivalent. In the US, they use Fahrenheit, don't they?
They do, but Boston Frank's kindly converted it for us because off the top of my head, I wouldn't be able to do so. I don't know about yourself.
Good man, Boston. Boston. McKelvey, how do you like them apples, Minnie?
Apples? A McKelvey a type of apple?
No. So we need to get you on Good Will Hunting.
Good Will Hunting?
Good Will Hunting. One of the best movies ever made, but it is set in Boston.
I thought you were going to say McKelvey was a type of apple, like a Granny Smith or something.
I don't know, actually. It might be. Good morning, Andrew. And yeah, indeed, welcome back, Ange. She's already mentioned Sarabi Gold to me. So there you go. The gold, actually, do you know what? That was one of the things that saved me yesterday. These gold miners have been up and away. Let's see if we can get the chart up of those. I was actually, every time I looked at these yesterday, it was going higher. There we go. So there are, well, that's the gold miner ETF I'm in. That, of course, includes. So yeah, so that was nice to see. That's going from 58 on Friday when the non-farm payroll came out. 58 up to 63 almost.
Very nice. Nice little move.
Nice rise, isn't it? Right, what else did you see last night? Because you were on the late shift, weren't you?
Yeah, so I was on the late shift last night. So for those of you who don't know, normally 1 or 2 times a week I do a late shift, and that'd be from 1:30 to 9:30. Now, when US companies report after close, I'd say on average it's between 9:05 and 9:20, 9:25. So I do actually get to see that movement. Then when I'm done, we hand over to the Australian team and they take over from 9:30. Right. So if any calls did come through, obviously I'll be gone and they'll be there.
G'day, mate.
Good accent, Rich. Very good accent. Right, let's talk about super microcomputers. So is it okay if you bring up the...
Sorry, I have just seen SWC have announced a bond issue.
Yeah, I saw that.
That was not expected.
I saw that was on the
So that just
RNSs.
at 7 a.m.
That just came out today, because normally what I do is at 7 in the morning, I send out all the RNSs from the LSE website or a BFW, so Bloomberg First Word, if there was one.
I am shocked. That's interesting because he even spoke to Michael Saylor and said, and Michael Saylor advised them not to do a bond issue.
Right.
Considering that converts is the way that...
into stock after a certain period of time, is it?
Well, no, sorry, converts is the way that MicroStrategy's gone.
Okay. Yeah.
And this was all discussed at the Bitcoin Treasury Conference.
Right.
And Andrew explained that he had had a meeting with Michael Saylor, and that a pref stock option was one way to go, and the convert was less likely. And he's gone and done it. Very interesting.
No messing about.
So you go through, what was it?
I can talk about SMCI and
you go
Snap.
through SMCI and I'll have a quick look at this.
Cool. So SMCI, I prepared beforehand and I've got myself a nice article from Bloomberg. So the headline is Supermicro shares plunged 15% on weak results, disappointing guidance. The company's... Sorry?
How much?
15%. Yeah, a lot. Snap also drops a lot, but we'll talk about that after. So the company's growth rate is slow since last year when businesses expand as companies built up AI computing capacity. Here's some numbers for you. So it was 41 cents adjusted earnings per share versus 44 cents expected. And revenue was $5.76 billion versus the $5.89 billion expected. However, revenue increased 7.5% during the quarter, which ended on June the 30th. Interesting, because I remember with SMCI, it was at the end of February this year when basically their accounting records got approved due to the fact that it must have been end of 2024, very early 2025. They missed the deadline and there was risk of them being delisted off the NASDAQ, which of course would have been absolutely awful. But now that's passed, that's approved due to the fact that they submitted the statements for the extended deadline. So that is all good. But the price chart, with SMCI, 15% drop, doesn't look nice.
Right, on to Snap then.
Yep, Snap. Let me bring up the details. Snap, also the results, they weren't great. They weren't great at all.
It's definitely been the one that's failed, hasn't it?
Yeah, so headline for this one is Snap stocks plunges over 14% after hours as CEO Evan Spiegel says engagement shifted from stories to content sharing. I used to use Snapchat a lot when I was a kid. However,
Last year. Where did you
26 now, come on.
When did you stop using Snap? Go on.
Well, I actually do use it. I need to message my younger brother and sister because they use it. That's why. But like to message like my mates from school and uni or whatnot, I use WhatsApp. Right. And what the story is here is that a lot of people have shifted from actually posting like Snap stories. So have you used Snap yourself? So like you do like a snap story, it would last like 24 hours, right?
Okay.
So like if you, I don't know, if you're out at a bar.
It's like Instagram stories, yeah.
Exactly, yeah, 24 hours, and then after that it disappears. But basically, what Evan Spiegel, the CEO, has been saying, has there been a lot of shift away to more content story rather than people posting stories.
Right.
Okay. So that was...
People consume things rather than putting things out by themselves.
I mean, also you've got like TikTok as well, which is, of course, growing. It's very popular. I mean,
Yeah.
I spend a lot of time myself on TikTok.
So TikTok's crushed Snap, basically, and Snap is now the loser of the...
Yeah, because I'd argue that TikTok's a lot more young people use it over YouTube now, because you've got YouTube, which is like 10, 15-minute videos.
Yeah.
Okay. Whereas TikTok maybe like average 30, 40 seconds. So rather you can just scroll rather than having to watch like a much longer video on YouTube, which I personally prefer myself. But
People your age tend not to really like to have to focus on things for a long time, do they?
that is Gen Z.
Thank you for staying with us so far. Excellent. Right, come on, let's have a look at this SWC then. So, a smarter convert has been developed in partnership with Tobam. Who are Tobam? Let's have a look. Tobam is a research-driven asset manager with over 40% of its team involved in PM and research. They are French-based, and it is a chap called Yves Choufati.
Yves Choufati.
Choufati. Right, so let's... yeah, well, this...
Interesting.
So yeah, I hadn't heard of them before, but
Neither.
they are, looks like they're involved in crypto as well. So that explains. But it's solely subscribed to by Tobam. And they've raised 21 million, which is obviously an impressive number. And let's get the details. There we go. So closing price was 195 a share yesterday. Therefore, the reference share price for this initial tranche, Smarter Converts 195. For the exchange rate, Right, here's the key terms. Conversion price. Investors may convert into equity at a 5% premium to the reference share price. So that would be £2.05.
Yeah.
A forced conversion after an initial 6-month period, the company has the right to force conversion into equity if the share price trades 50% above the conversion share price. So that would be £3.50.
And it's got to that level before.
Certainly has. Downside protection. If the bonds are not converted within 12 months, the company will repay 98% of the bond value. So this is big because this is Andrew's first step into the world of debt.
Yeah.
The company now has debt on its balance sheet. The bond's principal value is denominated in Bitcoin. This means the amount repayable at maturity will be adjusted based on the price of Bitcoin at that time. So it's got downside protection. That's the downside protection. That's interesting. So if Bitcoin goes down 50%, then Tobam take 50% less sterling because they take Bitcoin.
Right, okay.
That's interesting. Clever. I don't think even strategy does that.
I'll have to read over that again. That's a lot to take in.
It is, yeah. And we, literally just learning about this as we read. Smart Convert offers the potential to raise capital at a premium to the current market price, while also allowing the company to increase its Bitcoin holdings. However, the total amount of Bitcoin to be acquired through this initiative will be capped at approximately 30% of the company's existing unencumbered treasury Bitcoin holdings. Okay, that's got a lot of big words in it.
Yeah.
The total amount of Bitcoin to be acquired through this initiative will be capped at approximately 30%. But
I don't need to know what the unencumbered amount is now, right?
Oh, we've got a scenario. This is who's come to this If the share price does not rise meaningfully over the next 12 months, it may not be attractive for investors to convert their bonds into equity. In this case, investors may request the payment. Fine. Smarter Web Company would retain the remaining 2% for expenses. Best case, if the share price rises above the conversion share price, which is £3, which is £2.05, investors may choose to convert their bonds into equity. Alternatively, if the share price trades at the 50% above, for 10 consecutive trading days, the conversion is forced. In this scenario, Smarter Web achieves a capital raise at a premium based on the conversion share price being higher than the reference share price, resulting in approximately 5% less dilution.
So that what?
If all the bonds are converted into equity, a total of 7.7 will be issued. This is calculated at 21 million times that.
So that worst case scenario
Really
doesn't look too bad.
Yeah,
Yeah. Based on that, it doesn't look too bad. 98%, obviously 2% go to cost for SWC. But
right, let's move on. I don't want to spend too much time on it. That is really interesting.
Yeah, a lot to get my head around.
Yeah. Really interesting. Right. Okay. So shall we do a quick? What time is it? 7:51. Let's do a really quick preview of the favorite company out there, of course, because there is nothing like a McDonald's. Isn't that right?
What's your go-to McDonald's order, Rich? If you eat McDonald's, that is.
Oh, I do. Oh my. Mate. Have you seen my stomach recently? I'm a once a month man.
Once a month.
And it's 2 plain hamburgers with ketchup. No onions, no
You
gherkin,
joking?
no mustard. Plain hamburgers with ketchup and a large fries.
Why not one double cheeseburger? Why not one double burger with cheeseburger without cheese?
I have that when I'm at the airport.
You are very strange.
I got off a flight to Sydney, right?
Yep.
And it was 8 a.m. in Sydney, and I had 2 double burgers. Oh,
You're a strange man, Rich.
right. So McDonald's reports Q2 2025 earnings before they open today.
Yep.
Analysts project EPS of $3.14 on revenue of roughly $6.68 billion. That reflects revenue growth of 3% year on year. They're only growing at 3%. The stock is up 4% year to date, the ultimate defensive, and trades moderately below its 52-week high of $326. The focus are going to be on the same-store sale trends and the price mix strategies. Remember, in Q1, global comparable sales declined 1%, with international development license markets growing 3.5%. The main focus is going to be the performance of the McValue meals, so the $5 meals, £5 meals.
Yeah.
And the beverage promotions, and those will be scrutinized for a lift in traffic versus margin erosion. Or is this going to be the first time we see the US consumer or the global consumer start to struggle and start to pull back on even discretionary things like McDonald's?
Because, I mean, here in the UK, not sure in the US, McDonald's, compared to most other fast food chains, is relatively cheap. Like you say, you can get a meal for £5 quite easily. However, it's not healthy. It's not healthy at all.
It depends what you have. If you don't have any mustard, gherkins, or onions.
So they do like carrot sticks and stuff, but I wouldn't, I occasionally get a McDonald's breakfast. I wouldn't really get something after 11 p.m., which is when the breakfast stops. Makes you feel a bit ill sometimes.
11 p.m.
11 a.m.
Right, it is 7:54. We had our little fun yesterday. Should we go back to the normal music today? What do you think? The guess the chart. Come on, it's not about the music, it's about guessing the chart, Mini Cooper.
Still going to make it easy for us this time.
I doubt it. What country are we in? We're still in the US. Right. So it's a US stock. Yesterday it was AMD. What's it going to be today? 3, 2, 1. Fastest finger first. Let's find out.
market goes up, the chart goes down. Everybody's watching from across the town. Is it tech, is it clean, is it something new? Or is it just another pump to break right through? The rich says wait, but I feel the heat. Ain't says stop, but I'm moving my feet. I've got candles in my mind and a dream to sell, but the only truth is only time will tell. Guess the chart, whoa, don't look away. Is it faking love or a real parlay? Gotta break out hard in a fear of the dark. Feeling every tick when I guess that chart. The lines don't lie, but the moves might fake. Got a setup looking sweeter than a wedding cake. It's dancing left, it's moving right. I'm moonwalking through another sleepless night. Phil's got tricks in his old blue book.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Did anyone get it? I didn't get it. Who got it? Hamish. Is it Ralph Lauren? Is it Ralph Lauren? Really? Is that what Ralph Lauren's done? I have not looked at that chart for a long time. That is unbelievable.
Impressive.
This stock has been one of the absolute best out there, considering what we've seen in high fashion, like Gucci, like Louis Vuitton.
Struggled.
Really struggled.
Yeah.
How is that at its all-time highs?
I was going to say, I'm disappointed because you were wearing a Ralph Lauren shirt and you didn't manage to guess it.
He's done me there, hasn't he? What an idiot. And I've been moaning about my cleaner because my cleaner put my white polo shirt in a coloured wash at 60 degrees.
I literally did that at uni.
That's a sackable offence. So yeah, if you don't think my polo shirt is looking as crystal white as it usually does, please let me know.
You know who to blame.
Yeah. we had words. Right, let's have a look then. We've got 53 seconds before Mini Cooper's about to grab his bell and open today's market. I'm trying to get the pre-market prices. Here we go. Right, Numis are calling Glencore up 1%. H1 results in line, remains confident in a stronger H2. So Glencore up 1%. We are seeing Quilter also up 1%. Assets under management 126 billion. Vistry up 2%. Greg Fitzgerald has purchased 84,000 shares. Of course, Greg in the limelight. Previously. Right, let's go on, Mini Cooper. Dead on.
There we go.
8 o'clock. Well done, you.
Timing.
Right on 8 o'clock. What are we seeing? Well, it's the FTSE was looking up 40 basis points, so we should have some strength here across the board. Shell up 90 basis points. What other big names jump out to you?
Got BP up 74 basis points. We have got BHP Group up 28 basis points. Fresnillo up 0.92%. Smith and Nephew up 1.28%.
Refresh for you there.
There we go. Travis Perkins up 1.59%. Rolls Royce up again 1.26%. Diageo.
What prices rollers now?
Rolls Royce spread bet CFD price. I assume you've got those 1086 at 1087 spot 5. Flutter up
Or £10.86 as it's otherwise known.
Yeah. That's because I'm so used to quoting that on the phone when I normally quote leverage clients.
I tell you what was really disappointing yesterday. It was nice to see Palantir sell off, probably going to be up this morning. But Lloyd's was really disappointing on the back of an upgrade. Lloyd's faded away, and I even bought more because it sold off. Back down to 81. Stock was 83.5 in the morning.
I remember when you gave me the order just before the open when it reported, and then it was up like 7%. I want to say shortly after.
Yeah.
Which is obviously very, very good. Legal in general down 4.13%. There was some news I remember seeing this morning when I was looking at the RNSs on the LSE.
Yeah, right. You find some legal in general. Glencore down 2% on numbers. That was against what Numis were thinking. They thought up 1. So disappointing for Glencore. Now 2.5. That's under the £3 level that everybody keeps in their mind as the level of interest. SWC up 8%. We're going to take a look at that in a second. It was up 10. So we are going to have a good look at that one shortly, because normally in a convertible bond, if it goes out to the market, then people hedge it, right? So normally in a large cap stock, if you get an announcement of a convert, the stock's usually under pressure from the convertible bond traders hedging their position. However, if it's only one client that's taking it, maybe they don't want to hedge it. So, you know, there's a chance that they get away with that. But remember, in the market, they are selling 15%. So not only have they come out with good news this morning, taking the stock 8% higher, raising 21 million sterling at a 3.5 times MNAV. So therefore they can buy, you know, a large equivalent of Bitcoin. They're also selling you stock in the market and raising more funds to buy Bitcoin. So
see if it pays off.
It's really, you know, it is interesting. I'm going to have to take a long look at that one today. I do not hold any at the moment, but a flurry into convertible worlds.
It's on the cards.
Suddenly you're bringing back new opportunities to raise money. Right.
So on legal in general, just got the update from our news page on our web trading platform. From what I can see, it doesn't really suggest anything negative, but the title is Legal in General reported forecast beating half-year operating profit on Wednesday as a British insurer undergoes overhaul designed to boost returns under the new CEO. Reported core operating profit of £859 million, up 6% on the prior year, and ahead of the £816 million average of analyst forecast compiled by the company. Interesting. We've got Ferexpo down 5.38%.
Yeah, that one's...
Yes, Severn Trent down 0.48%, and Unilever now down 40 basis points.
Right, Diageo recovering, did drop yesterday. It had that big move. Let's have a look at the intraday one. It had the big move on the open, gave it back, and then, so let's go to 2-hour chart. Right, where are we? So the big, yeah, look at that. So huge jump up and then sold off during the day, but we're back to where we were. So that is reassuring for Diageo there. The questions in the newspaper this morning was, was the interim CEO putting an especially positive spin on the
Yeah.
cost cuts,
Okay.
right? The business is clearly in a decline,
Right.
the drink sales, because you just don't drink, do you?
No.
You
See,
lot, you Gen Z lot.
Gen Z. Yeah, I was reading
Sorry, is it not just Gen Z?
Gen Z. Gen Z, right? Am I going crazy?
Well, in Scotland we call it Z, but
Oh well, same thing. But yeah, a lot of people are shifting towards like running clubs, gym.
walking
Also,
33,000
I also
steps.
exactly. I also read that a lot of people have been shifting to gaming, but I'm gaming and gambling actually. But I'm
Gaming
not.
and
I'm not
gambling.
yeah, that's what I read. But I'm not.
They're all long Palantir.
I'm not. But I'm not too sure about the gaming one. I certainly have a few friends that don't drink, but not many that like spend a lot of time on gaming.
Do you have friends that drink?
Yeah, and don't drink. Bit of each.
And
Best of
so
both worlds.
that's interesting.
Yeah.
Very, very interesting. Because of course we are, we're clearly seeing a decline, but whether that decline is
Yeah, and there's a lot of
permanent,
of clubs, of course. Well, particularly since COVID, of course, with a financial.
Glencore getting absolutely cuffed.
Yeah,
Down
I mean,
4.4 now.
Glencore has over the past few years performed very badly. Arguably, one of the reasons for this is that a lot of their consumers are from China, right? And due to the fact that China's economy hasn't done pretty well again, like since COVID,
Yeah.
then you could argue that as China's slowed down, there's less demand for Glencore's products, so therefore Glencore suffers as a result.
Right, Diageo now up 2.6, so clearly we'll have to see if Angeline's found if it's been upgraded or anything this morning, because that's going stronger for a reason, clearly. BP up 1.4. Why haven't I bought BP? Just watching it go higher and higher and higher.
No time like the present.
Well, I can't now because they're up 1.4%. It's the same as yesterday. Oh, I can't now. They're up 1.4 and then suddenly they're up another 2%. Right, what's going stronger in Europe? It is Deutsche Bank, it's Air France, it's Siemens. But where are Novo Nordisk?
Yeah.
We're going to have to check them soon, aren't we?
Yeah.
Bayer down 2.2% on numbers. That, of course, the owner of Monsanto. The stock market darling in 2006. Not so much now.
No idea about that one. I was 7 at the time.
Thinks that's funny. Deutsche Telekom down 40 basis points. And yeah, so a little bit boring there in Europe. Commodities, shall we have a quick check, sir?
Let's have a look at commodities. So we've got oil US crude up 1.04% and Brent crude also up 1.04%. We've got spot gold down 23 basis points, whereas we've got spot silver up 0.03%. We've got nat gas down 1.81% as well.
Boise just telling us Novo's still $47, but yeah, the Copenhagen listing missed the Boyce. There we go. Angeline has indeed spotted that Deutsche Bank have raised their target price on Diageo to £20.60 from £20.10.
There we go.
So just a 2% hike there. Ange, let us know if there are any more nice big upgrades or downgrades. So, currency-wise, where are we? We're 132, well, basically 133 on cable. We're 115.78 on the euro. And I had to look up pound euro yesterday because we're getting the bills through from Ibiza. So, of course, all the bills are on euros.
Yeah.
We all use Revolut.
Yeah.
So trying to work out, and
What rate?
yeah, it's not one I ever trade, pound euro.
No, I mean, when I normally trade US shares over the phone, so if it's like £1 a point right now, that would be 133 shares. So if I was to do £1 a point in Tesla, it'd be 133 shares.
Right.
But let's say a few weeks back when cable was 1.35, £1 a point would be 135 shares.
Right.
So we always have to know the conversion bang on to ensure that the exposure is correct.
Of course.
Whereas you
To
wouldn't.
the nearest.
Yeah, exactly, because we do very commonly trade US shares. We do trade European shares, so it wouldn't be as much. So like yourself, I'm much more, what's the word for it, like in the loop with the rate of cable than I am GBP, EUR, for example.
Right, and the indices, FTSE, not as strong as it was actually. It was up 40 basis points earlier, now 25. The German DAX is going stronger and for longer, up 48 basis points. So generally, the weakness in the S&P yesterday, I don't know why it's so strong this morning. I don't get it. There was a lot of weakness, a lot of selling yesterday. Saw us down to 62.97.
Yeah,
And it's just jumped this morning.
AMD, SMCI, Snap were the main ones,
negative.
all negative, and by quite a large amount as well. But then again, you could argue they don't have such an impact on the index as like Apple, Amazon.
Yeah, true. I'm just
Meta.
wondering what the positive story is to take us up 44 basis points.
Yeah, should we talk about Novo? I've got a nice article from
Please do.
Bloomberg here. Right. So title is Novo profit misses estimates amid US obesity market competition. So operating profit climbed to 33.4 billion kroner, which is equivalent to 5.2 billion US dollars in the period, falling short of analyst estimates of 34.4 billion kroner. The numbers released Wednesday offer a detailed look at the quarter when Novo stumbled and the drug maker decided to seek a reset by ousting its long-time CEO.
So stock, the way to get, I'm on a price 15-minute delay in Denmark, but the way to get it is just by clicking on the price and it tells you what they are. So the stock's completely unchanged, right? It's closed at 305.90 last night, now trading 305.90 in the middle. So yeah, interesting Novos there. You know, considering they profit warned last week, it's not no. Thankfully not down more.
This was on the top news page on Bloomberg. This was second. So yeah, quite a big story. You can also trade the ADR line, which is all sessions at 9.
So SWC now only up 5, 20 on the offer. Ooh, I'm tempted. I am tempted there because
it was up 8-9% at the open from memory, right? And now it's 5%.
We didn't actually look, did we? But let's take a look at. Yeah, it's traded. Well, it's traded to. It closed at 220 last night, so it is up 10% on the offer still. Yep. Let's see how that one performs during the day because, you know, I like that all the hype has disappeared out of it. So it's trading at £2 because you know all the, you know the sort of
such. It listed at like 5p, didn't it?
Yeah, like all the meme stock ideas coming out. The people that took it up to £5 and stuff, right? That's come out of it now. I wonder if there's been an update on the actual analytics. Yeah, so market cap 568 million and a share price right, where we go. So the MNAV's right down to 2.8. No, that can't be right. Wow. Right, going to have a look at that later because it's, you know, now it looks like SWC is just that working away in the background, raising 8 million, doing converts for 20, selling stock in the market ATM, raising another 20 every few weeks. You know, that's how the MNAV comes down quick. So we're going to keep an eye on that one. We'll go to a quick break. 8:15 a.m. will be Fast Markets coming up next when we're going to look at Disney and Uber numbers coming up this very evening.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Well, you're not going to get better than cash returns. Cash returns, come on.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Right, welcome back to Fast Markets. We'll go straight into Disney. So, Disney set to report Q3 numbers before the bell today. Investor intention is squarely on its sports strategy. Because there are reports that ESPN has reached a deal to acquire key NFL media assets, including the NFL Red Zone, in exchange for an equity stake of up to 10% in the network.
Interesting.
So, of course, sports, big part of Disney's streaming strategy with ESPN there, but also we're going to look at how Disney Plus and Hulu, as streamers across the industry, is working to keep their subscribers.
Yep.
And also, let's take a look at the expectations. So, total revenue expected 23.68 billion. That's versus 23.16 in the last year's Q3.
Yep.
Adjusted EPS of 146 against 139. So you can see the growth isn't really there. Entertainment revenue 10.82 versus 10.58 expected before. The parks and experiences revenue.
Yep.
right? What are we expecting for that? 8.87 versus 8.39 billion in Q3 2024. So Pete Ward's trip to Euro Disney.
Well, no, Pete Ward's going to be going Abu Dhabi next because Disney are looking to launch a new theme park in Abu Dhabi. I've got here, yeah. Actually, what it says here is the company has been investing heavily in this segment with plans to launch a new theme park in Abu Dhabi and a large expansion program both domestically and internationally. So we'll see what's to come.
So that's Disney. That's expected before the bell today.
They last reported on the 7th of May, where results were very positive. And of course, one of Disney's main competitors, Netflix, who also have been doing very, very well. Both price charts for this year look very, very strong.
Yeah. Of course, remember in May, Disney raised its full year profit forecast to 575 a year. That was a 16% increase from fiscal 24. So it's all about Disney and McDonald's today. We're going to get that snapshot of the consumer before Uber come out tonight after the market.
We got Uber later. Prepared some nice stats on Uber for you.
Nice.
So I didn't know this, but Uber now has a presence in more than 15,000 cities, which is pretty incredible, and 170 monthly active users. Wow. I mean, I'd always use Uber, or if you heard of Bolt,
yeah,
use Uber or Bolt over a black cab due to the fact that they're so much cheaper.
It's the waiting time. I actually don't care £1, £2 either way, right? I care about the waiting time. It really annoys me when you have to wait 9 minutes for your Uber to turn up.
I've had to wait like half an hour, like 3 or 4 in the morning. It's not good.
Well, you're doing it 3 or 4 in the morning.
This was like a house party with some of my friends from trading services.
You just walk home.
No, it's too far.
You do 33,000 steps, mate.
Yeah, but when you're tired and like when you've been drinking and then you stop drinking for like an hour, it makes you feel even more knackered. And obviously, like I normally go to sleep at probably like midnight on a work day, and if it's like 3 or 4 in the morning, then I'm knackered. That's what it is.
It does. It reminds me of when I wake up. I know I'm gonna be the man who wakes up next to you when I go home.
Right, I've got a headache now.
I would walk 40,000 steps.
Yep.
Just to get home rather than wait for an Uber at 3 o'clock in the morning.
I really don't believe you.
Right, talking of Uber, numbers after the market tonight. It is Q2 25 earnings, and analysts expecting an EPS of 63 cents per share and revenue of around $12.5 billion. That is 17% top line growth year on year. Shares are up 40% year to date, but they have fallen recently by about 10% off the highs of $95 down to 88. So, has that been expectations falling going into these numbers? What is the focus? Well, the focus is on mobility versus delivery performance and also the leverage they've got in margins. We've got rideshare volumes, take rate stability, and profitability in Uber Eats as well. Those all remain critical, and that's what investors are going to be watching today. Any sign of pricing or tension in the operational numbers might dampen enthusiasm. The reason we would see why the stocks come off from 95 to 88 there. The guide previously was between 45.75 and 47.25 billion in gross bookings for Q2. That would imply 16 to 20% growth year on year. So daily bookings per customer is one of the key metrics, and overall trip volume trends will be closely watched. So you've got the rides, you've got Uber Eats.
Yeah.
Also the line bike. I think the line bike is one of the best things that cities have got.
I didn't even know that Uber owned the line bikes.
Well, they've got the joint venture.
Right. Okay.
But what a business that.
I only go on the line bikes when I'm with someone else. I've been telling like my colleagues like Sam and of course Pete about this because I don't know. I just don't feel comfortable doing it by myself because,
Go on.
Well,
Expand on that.
well, it's very dangerous cycling in London, and I've witnessed numerous incidents.
Okay.
And I'd rather not fall off on my own. But if I was with someone else, I'd feel more comfortable. Do you know what I mean?
So you feel safe? So somebody, as in you get a backy.
Sorry?
You get a backy.
A backy?
So it's somebody else. You feel safer if somebody else is driving it, and then you sit
No.
behind them with your arms around the waist. Well, what do you mean with two people then?
Well, I'm on my bike.
You go in the basket.
What?
Do you sit in the
How
basket?
small do you think I am?
So you have a friend right alongside you.
Well, I wouldn't go that far. Just in front or behind me, because obviously here in London we've got the lanes and we've got obviously different ways, but it's quite small. The line bucks are quite big and they're really, really heavy. They're
Right.
not like a normal road bike or slightly heavier mountain bike. They're much heavier than both of those.
So where does the other person go then? They go in front of you,
Behind or in front, yeah.
and that just makes you feel more comfortable.
Yeah, I just wouldn't want to. It's a bit weird. I'd rather not do it by myself.
We love you, buddy. You're my favourite. You really are.
Funny that.
Good stuff. Right, so what else are we going to be watching? Well, we're going to be watching Palantir. That's going to hurt me on the open, clearly, because with the S&P 500 now looking at 6,328, up 47 basis points. The NASDAQ underperforming. That's not normal. But of course, AMD down 4% is going to do that.
Yeah.
And
It's up 0.24%.
steady as she
Yeah.
goes.
DAX also doing pretty well, up 0.48%. That's the highest of the main indices.
We probably don't mention it enough. That is an all-time high on the FTSE, isn't it? Or within 5 points of it.
Yeah, yeah. And I know how much you love the FTSE, Rich.
Good old
Not as
FTSE.
much as I do.
Best performer in the year out of that in the US.
Yeah, yeah. I remember you grilling me when I last came on the show 2 weeks ago for not being too optimistic. So I won't be doing that anymore.
Right, grilling. Right, good. I hear Chris Beecham's dulcet tones in the background.
Beachy.
Let's do a really quick update on my portfolio. I kind of got away with things yesterday. I should have been hurt more than I was. But yeah, thanks to the S&P dropping during the day and thanks to Palantir dropping off those highs of 175 to 172, we've got long Apple. So I let 50 Apple go at 207, but still long 250 there. Eurostox, that's against the long ASML. And then we've got a bit of short FTSE against my Lloyds, short Barclays against my Lloyds, short NatWest against my Lloyds. We've got the long on copper is not really working. Copper down to 443 against my 449 intro. Lloyds,
There we go.
not just that thing is dying a death. Now trading 80.6, so I'm up to 85,000 shares now. Probably going to have to hedge a bit more of that. And then yes, Palantir we're short. Let's just move down. Excuse me 1 second while we scroll down. There we go. Palantir short 240 shares. But I did sell puts against it, so I'm short one of the 167s, one of the 162s, and one of the 145s. Then we're short 3 of the 185s. Now, this was the trade that I got away with yesterday because we're short at 273. The stock was up 7%, but because it wasn't up 10%, this thing actually contracted in value and gave me a bit of profit there. Then finally, we've got those gold miners. So gold miners long 300 of those, and those have had a strong few days.
Very nice.
That is the update on the portfolio. Palantir going to hurt today, I would imagine. Hopefully, Apple will be up more than Palantir. That's the key.
Let's see. Pre-market's open in half an hour.
Indeed. Indeed, indeed. And we will be back with Angeline for those. my trader friends. If you haven't subscribed, what should they do, Mini Cooper, for
Please.
more of your line bike stories?
Please hit the like button and of course subscribe.
If you like Mini Cooper, if you like our songs in chart, guess the chart, and if you like seeing my losses on screen in Palantir,
Say that.
give us more likes. I can hear you, Chris Beecham, in the background.
What's he saying?
He goes, I like that. It's because I called him Claude the other day.
Oh no.
I was joking that he uses Claude for some of his...
We wouldn't like that.
Oh, do we not like that? That's right. Don't you worry. Axel is back for some good trade of the weeks. Oh, his S&P 500 worked well.
Yeah, I saw that.
It's done well. And now you can learn all about charting crypto. That is coming up after the break with the wonderful Chris Beecham. Give us some likes and subscribes, and we shall we'll set Beachy a light into crypto world. See you after the break, people.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hello and welcome to Charting Crypto with me, Chris Beecham. Let's look swiftly on what is another busy week for crypto prices. Interesting performance really over the course of the past week, because I think we talked about this last week, if you remember watching, with consolidation phase in Bitcoin may well have run its course. It has to be said. And it's interesting in the way that the flows in Bitcoin, it's a bit of a comment actually from a lot of people. If you note, the volatility in Bitcoin has dropped off quite a lot because of the fact that institutions and the flows through into ETFs are beginning to take a lot of the bite out of Bitcoin moves, has to be said, making it, again, more like most other financial assets, having achieved that credibility that they so long desired. So you haven't seen as extreme a move to the downside. It's also trading, I think, more in line with other markets, it has to be said. So if you look at Bitcoin, very similar kind of pattern here to what you saw, dare I say it, in the S&P 500, namely these highs and then a stalling of momentum and this drop down. And I'm delighted to say this trend line I drew last week is still more or less in effect, and also the 50-day moving average just continuing to provide support here. So this is the kind of price action we wanted to see. And it's a reminder, of course, that prices in financial markets, including all cryptocurrencies, they go up, they go down, they go sideways. And you've had a clear dose of that over the past month or so. You've had your sharp move higher in early July, which essentially then ran into a wall at 120,000. Consolidation, an attempt to push higher. We did see some buying at the lows, or certainly below the lows, around 116, 115,000. And then this brief break to the downside, all too brief, I'm sure, for some people, but a brief break to the downside, coming back down towards 112,000. And it seems to have found its support level, which is interesting. That's above the previous highs from the 10th of June. So another positive sign there, a higher high being created as ever. That's what you want to see in the uptrend. And then a steady push higher over the weekend. Don't forget, of course, we're dealing with weekends here, into Sunday. And then, like what we had with indices, not quite so dramatic. Indices obviously really had a very, very strong Monday. But we did see again on Monday, slight weakness yesterday. The ISM PMI, again, you wouldn't think an ISM services PMI would affect Bitcoin, but it just gets lumped in with risk assets these days. So you did have a bit of a move to the downside to retrace a lot of those gains from Sunday. But again, continued to recover. Crucially, if I was looking at something, I use stochastics, I actually use RSI, but stochastics is another way of looking at momentum. Seems to have shifted in a bullish crossover for the first time since late June, which is also very good. If you look at the record of this one, not a perfect indicator, there isn't one, but the fact you have got another bullish crossover, look at the last time it happened, did deliver you a particularly impressive bounce. We're not suggesting it would happen again. History doesn't always repeat itself, but worth bearing in mind that it seems that we have now got the beginnings of a more substantial move to the upside, potentially. Watching this to see, of course, the areas where, well, the key area to watch really has to be this one around, call it 115,300, because that's where buyers stepped in on the 25th of July when the price was particularly weak. It's where we saw some selling develop, on Monday rather, around those highs. So if it can clear this area and get back above 116,000, you can really begin to feel that the price once again is moving towards the upside. The uptrend has reasserted itself. And then if we're looking in terms of movement, we're back on towards these highs, 120,000, 122,000 through August. I'd have to look up the seasonality for Bitcoin. It probably is just going up every single month, but we'll see whether August is a particularly good month for Bitcoin or not. I'm not sure of that at the moment. But again, here's your support zone developing around 112,000. For the time being, so long as that holds, you can make a case for saying we've got a higher low being formed here, and we could see a continued push to the upside. Let's go on towards Ethereum. Much more impressive performance here from Ethereum. Not so much consolidation, but a very sharp move over the end of last week to those lows at 3,400. And then we saw Sunday, and indeed, again, much more like what we had with indices on Monday, a very, very strong bounce in Ethereum. There's a lot of strength here, which seems to be outpacing Bitcoin in percentage terms, really, I think. And retracing some of those moves yesterday. Let's just skip to the hourly chart to get a sense of that, a sense of what we saw yesterday in that price action. And this is what you'd expect to see really in any market after such a sharp move higher. But you went from 33.70 on Sunday up towards 37.37. So a very, very strong move. It was not therefore surprising that you've had a bit of a retracement here, and a quite dramatic one, 36.50. But certainly, really, you've got to love that. You can very much a block of support coming through there around 35.60. That's indicating that there's your sort of pullback, and then prepares for another move to the upside. So don't forget, of course, things don't ever go in straight lines. You needed that retracement, and then you get another leg higher. So often the way, this is just the hourly chart, of course, so the moves much more dramatic and concertinaed, if you like, in terms of the time frame. But the fact that you've had that move there, that consolidation, gives us expectations that we can see a further move to the upside. And again, if it was me, I'd just be looking at this in terms of the consolidation resolving into move higher with that bullish crossover in those stochastics. It's not a guarantee, of course. You'll note there, of course, it didn't really work out in early June, but it then did work out again in the latter part of June. So it's just a question of sort of filtering out these signals in the short term. But if we're looking continuation here above 37.30, which was the highs we saw on Monday, would then give us a bit more confidence that we're off back towards 39.50, maybe even the 4,000 level beckoning. A nice big round number there, no doubt. Enthusiasm for round numbers persists in crypto prices just as much as it does in others. But continuation there of the uptrend from those April lows. Very, very encouraging sign there if you're expecting it or hoping it would continue. Not much of a pullback, of course. That might be a slight concern, it has to be said. That it's a very brief pullback here rather than the extended consolidation you had in May and into the first 2/3 of June, really has to be said, before the next leg higher. But sometimes you don't always get the longer term consolidation. You get just the brief pullback, and then it shoots higher once again. So for the moment, it does look like the buyers have reasserted control in this one, and that we're back off towards 4,000. We'll get to XRP in a second. We've got Solana first. In the request, who was requesting that? Oh, Hamish, there we go. Seems to be holding around, yeah. If you look at these moving averages, it's got the 50-day on this chart at the moment. I won't clutch it by adding in too many, but it's interesting that this has not been quite the sort of conviction uptrend that you had in Ethereum. I think it probably lies in between Ethereum and Bitcoin, really, one to keep an eye on. Though again, here's your stochastic crossover, which gives us hope that maybe we've got buyers pushing back into this one, and maybe taking us on towards these highs around 206. If you look at the hourly chart for that one, in terms of what we're seeing in the consolidation, yeah, again, support developing around the 162 level, a bit overstretched in the short term around 172. The problem for Solana at this point is that we're just seeing this resistance over the last sort of 12 hours or so develop around 165. Attempts to push through there have so far run out of steam. You can see these candles there, just a lot of hesitation. And that was interesting because if you go back into the trading from Saturday, that's where that resistance has emerged as well. So there's your line in the sand. I think if you want to see that sustained move to the upside in Solana, you've got to have that movement above 162, if not, sorry, 165, ideally above 166, because then you've got the clearance to push on towards these highs. It's not a bad performance here, but certainly not quite showing the conviction I think that we saw certainly in Ethereum, also to an extent in Bitcoin as well. Looking at the longer term picture though, we can just zoom out a bit again. I think we talked about this last week, the way that the uptrend hasn't really been the case in Solana that it has in others like Bitcoin and Ethereum. But you have got these higher lows and indeed higher highs, of course, coming through. So if you're looking from the April lows at 101, we topped out 180. The fact that we were able to provide that higher low at 132, and there's your the nod to Axel, he's back next week. That positive divergence in momentum indicators, i.e. what you've got there is a lower low in the price, but a higher low in stochastics. That tends to send the message that maybe, you notice I hedge that with plenty of conditionals, but can show a message that actually you've got potential for a turn higher in the short term, taking us on, as it duly did towards 206. So a good example there of where you want to see that kind of positive divergence. Remember, the opposite was negative divergence, where the price doesn't make a lower low, but the MACD does, can be a negative sign in the short term. But the fact is, you've got this bullish crossover here. Momentum's still relatively weak, but if this crossover sort of crosses back above and manages to get back into this zone here, it's a sign that the uptrend maybe has a bit more strength to that. Notably, the last time it happened, or the previous time it happened in early June, it bounced and then failed. So there was your sign that there wasn't very much conviction behind that bounce, but then indeed turned into a more substantial one over the course of the second half of June and into July, with that very, very strong rally up to 206. This one still in its infancy, if you like, but one to keep an eye on. Certainly some support coming through, as we said, around the 160 level there for Solana. And then on to XRP. It's all about crossovers in the MACD, in the stochastics, because that's exactly what we've seen here as well. What we had over the past, where are we, 2 or 3 weeks now in XRP, looking again very extended, but the fact it was able to close and hold even only briefly above these highs from January sends another strong message. So the fact it's doing that, and also that it's held support last week around $2.78, $2.79 above this high from the first half of May, sends another positive message that maybe we've got a bit of a recovery in this one as well. And the buyers stepping in, it very much was a buy risk assets over the weekend, all things considered. Stocks, Bitcoin, gold as well, actually, given various other news, but very much the case that we saw the buyers step in over the weekend, push it through into Sunday. Yes, we had a stumble in yesterday's session, but some buyers attempting to emerge once again here. So nonetheless, a very positive sign for that. If we go to the hourly chart on this one as well. Just consolidation 2.9 there was where the selling sort of halted early this morning, really, and then coming into play. So that's a strong sign as well that maybe you've got a bit more momentum to the upside coming through. Not so much divergence on this one at the moment, but we'll see whether we can begin to mount a more substantial move to the upside here. Closing above 3.1 would then give us more confidence, if you like, that we could be on a move back towards these highs from where were we? The latter part of July. You go, sorry, the 28th of July on the hourly chart there. Overall, a very positive performance from crypto prices over the course of the last few days. If we could just go back to Bitcoin, see where we are. Again, not much movement since we talked about it at the beginning, but I think you can take heart from the fact that, along with other asset classes, risk looks fairly well positioned for the second half of August. It's not exactly the best month, particularly for stock markets. If you look, it tends to be fairly mixed at best. But I think with so much news now out the way and a little less focus on what the Fed is and is not going to do, there's one to watch for. If you've got, of course, in US inflation next week, that's next Tuesday, so it appears to be the next big data point to watch out for, even for crypto prices. But overall, in a land where you've got institutional flows, it seems like crypto prices remain, I think, relatively supported in the near term. I think that's all the requests I think I've had. We did Solana, didn't we? We did Solana? No, we did. There we go. Sorry, the gallery's telling me something I've already done. There you go. Getting in trouble, but I think that's everything. Axel, you'll be delighted to hear, we'll be back next week. So for crypto, for trading crypto and charting crypto, and also trade of the week. So thank you very much for being with us this morning, and don't forget to like and subscribe.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100, where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, overowned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down.
Hey, trader friends! Good to see you. It's good to be back, and I hope you have all been behaving. I was out there waiting to get a message from one of you saying, buy the dip, but it looks like markets have all bounced back since the non-farms number. Let's just have a look across the board here whilst we are counting down to my favorite time of day, which is 9 a.m. That's when the oil session starts going, but looking elsewhere first, it is pretty much risk on at the moment. As if it knew I was coming back. FTSE 100 up there. The DAX as well seems to be continuing higher, although it has had a few bits of correction there, but it is still marching higher there, as you can see. And also, as we are counting down to earnings from McDonald's, from also Uber and Lyft, we are seeing a bit of risk on sentiment here across, at least in Europe. Let's have a look at some of the, we've got 7 minutes to go. Some of the earnings and also the ratings upgrades and downgrades. We have advanced micro devices. We're going to look at AMD a bit later on. Lots of you, of course, trade AMD. It has had Morgan Stanley has cut its target price to $168 from 185. So we're keeping a look at that AMD for you when it opens. Snap as well. Monkey Man, are you here? Is Monkey Man around? I haven't seen him recently on the chat. Snap, Evercore ISI raising the target price to $12 from 11. We'll also take a look at that one. Plus, we have Oracle as well out with an upgrade, I believe. Hold on, let me just get that up for you. This is an all session, so we're keeping an eye on that. Oracle, like many of these stocks, also has been marching higher since that April correction. And Oracle, TD Cowen raising its target price to 325 from 275. Currently, it is at 255, as you can see there. Hi, Derek. Good to be back, and Shrimp Fred as well. Take it you've been number one and hotspot of most active on the chat here. Andrew McKilvey. One of the first things I said to Rich when I came back was that Sarabi Gold has started marching higher. So good to see that as well. R. Sachs, thanks so much for your welcome back. Boise as well. Boston Frank, Steve, and Maturin. Good to see the gang in action. Few other upgrades and downgrades coming online right now. We have Comerica. This is the company that runs a lot of the sports venues in the US. Jeffrey's there raising Comerica to hold from underperform, and also raising the target price to $70 from $50 there. Let's just have a look at some of the other big names that we are watching out for. I already mentioned AMD. That, of course, was out with earnings, and I crunched some of this for you. For those of you that were watching this yesterday, after hours, stock performance down 4%. Then let's have a look as well at some of the breakdown of its numbers. The one that I was watching out for was the data center revenue, up 14% year on year there. And it's also, bear in mind, those of you trading AMD, that it has already had pretty stellar gains so far year to date, and beaten the chip index, which has only gained around 28%. Some of the key challenges for AMD as well, the data center revenue growth lags NVIDIA's. Also, it has been hit by the tariffs as well. These are the expectations of more restrictions to come as well in terms of US exports. It's also seen its AI chip sales decline year over year. But some of the opportunities out there for AMD, it has had, as I mentioned earlier, very strong year-to-date stock price performance versus the chip index outperforming. And also, it's seen this big production ramp up for its second half of this year. So watch that space. Taking a look at some of the others that are out a bit later, checking in on McDonald's. We had someone on the chat earlier saying that statistically, if you have McDonald's open up near to where you live, then you'll have the price of your property go down. We will have a look at that link a bit later when we've got Dylan online, but it'd be interesting to see whether this holds if you live in Kensington, places like that. So McDonald's, let's have a look there. How many of you like a dirty McDonald's just before a flight in the airport? I'd like to know. Hearing people in the gallery going, yeah. So McDonald's here, we are expecting to hear growing revenues, or it to say it's got growing revenues. However, it is important if you're trading McDonald's to understand the landscape of this space. We have heightened economic uncertainty, and that is putting pressure on lower income dining. McDonald's trying all sorts of things that it's very good at. Of course, the value offering is one of them, to try and keep customers walking into their stores and buying those value meals. It's also trying to change the demand pattern so that it can better service the quick service restaurant sector. Those of you that have been to McDonald's recently, you'll find that many of them have those kiosks, that rapid kiosks, and they've also had little cafes on the side as well. This is all part of its strategy to get its fast service restaurant offering to clients. Having a look now, if you come off my screen, I'm going to show the trader friends because we're almost at 9 there. Going to quickly get my chart up ready. Escape, there we are. And we are going to switch over to all sessions because we're counting down right now. And here we are. Let's have a look because we are off to the races. Or almost really. Yeah, we are almost there. Just getting that ready so that I can, 10 seconds to go. 8, 7, 6, 5, 4, 3, 2, 1. Here we go. Right. A lot of the names popping up top of my list. Quantum computing, IonQ, they're up more than 4%. Let's have a look. So we get the gainers first. Ocugen now 4.7%. Some of the electric car makers are near, they're up 3.5%. We also have Novavax bouncing. I believe this was down whilst I was away. It's now up 3%. We got Hims and Hers too. This monkey man on holiday, he's normally very chatty in the mornings, but he doesn't seem to be here at the moment. Hims and Hers up more than 2% there. We're also seeing Coinbase up 1.5%, and also AMC, that was a big meme stock, of course, up 1% there. Broadcom up 0.75%, and for Richie Rich, Nike is up 2/3 of 1%. Let's cross over to the losers right now. Super Microcomputer down 17% there. We also have Snap, which is down more than 15%. Snap, of course, earlier on had a ratings move. We have Rivian and Lucid, both down quite a lot. They're down 7% for Lucid and Rivian as well. And we have Peloton. That was a darling during the COVID era, and that is down 1% now. Have no idea how Peloton is continuing, because this share price it continues giving if you are shorting. Also, having a look a bit lower down, we've got Taiwan Semiconductor also down 0.5% there. Just wanting to check on two others, just because we have them coming out with earnings a bit later on. We've got Uber Technologies, which is all sessions as well, up 1.7% there. Those of you that trade Uber and Lyft, you're up for a treat later on, because Uber and Lyft are out with earnings. Let's have a look at Lyft as well. And Lyft is up around 0.33% as we speak. Now, I've done some number crunching for you trader friends with ride hailing, and it looks at the moment, the suggestion or the expectation is that Uber and Lyft are going to report that they have seen a boost in seasonal travel demand. Let us know whether you use Lyft in the US. Boston Frank, do you ever use Lyft? I've only ever used Uber and also Grab in Southeast Asia. But Uber and Lyft are both expected to have benefited from more people using ride-hailing as they head out a bit more in the warmer weather. So they're expected to increase or have their revenues boosted by seasonal demand. We'll have a closer look at the robo-taxi strategy a bit later with Dylan, who is currently waiting in the wings. We're going to have a quick sting and we'll have Dylan back with us. Like magic, Dylan is going to edge a bit to the left and we're going to see him. There he is. You didn't tell me you could moonwalk, Dylan.
What was going on there? Now, hang on.
I know, I was...
Now we're here.
We're here.
Who's doing that?
It is Producer Phil.
Producer Phil. Come on, Producer Phil. It's hard enough. I mean, we're losing money. We're making money. We're with Wi-Fi. You got the camera pointed in the corner. Hello, Ange. Nice to see you. Pleasant to see you. Did you have a nice holiday?
It was amazing. You know, I know that you're in Milan. I know that you are true, you know, Milanese now. And I know that plenty of our client and trader friends, you know, stay in beautiful, warm countries like Maturin in Spain. But I've had 10 days of continuous sunshine here in the UK by the seaside, and that is hard to beat. When the sun comes out and it's beautiful here in the United Kingdom, it is truly hard to beat. And I can say that.
I'm not going to argue with it. I have many fond memories of beautiful, sunny summer days in England, and I agree that they are unique and special and beautiful, and I'm glad that you had 10 of them. You deserved it. So I'm happy to hear that.
Speaking of which, I was waiting on Trader Friends. I was waiting for a message to come through, although I had really bad reception on the water, or maybe even from you to say, buy the dip, or, you know, now it's time now, Ange. But other than that tiny little blip after the non-farms, it seems like that hasn't come to pass.
I mean, listen, I've gone full Super Bowl. They now call me Mr. Super. Oh yeah,
You're like
I'm
Super
full
Bowl
supernova
now?
Supernova. They call me Supernova on overtime every night. I'm telling you right now, this artificial and listen. All I'm saying is that this artificial intelligence thing, it's going to be a big thing.
And are you saying this because you think that this is what's driving markets, what's driving retail?
No, I'm saying this because I'm saying this because we're reaching constantly for all the problems. We're like, oh, what about the jobs number? Oh, what about the CPI? Oh, what about the PMI? Oh, when's the Fed going to cut? We're grinding our gears every day.
We are
reaching for something to worry about. And I believe it is a waste of time. It's not that those things are not relevant in a typical environment, but I do not believe we're in a typical environment. And I believe what's going on with artificial intelligence in the financial markets, in the stock market specifically, is so overwhelmingly powerful that it renders traditional considerations for traditional items like employment or inflation or rate cuts much less relevant, and that it's a waste of time to get all ginned up about them because they don't really matter at this particular time.
Boy, I'd love to know if Rich is listening from the gallery, because he's short, up to the eyeballs, because he's still expecting this big correction, especially for Palantir.
No, it's not going to happen. It's not going to.
Caught short coming
good
online saying, I am with Dylan 100% there. Donnie One saying Dylan Rattigan is my favorite financial commentator.
That's yeah. No, but listen. Okay, go ahead, please. I'll take the compliments. Who am I to stand in the way of a nice comment?
Jugger from Germany saying there is more dip to come. And Julian also chiming in. Good morning, Julian. Good to see you. Saying, please ask if he can describe yesterday's sell-off at the high level.
I mean, I look at yesterday's sell-off. I think it was the PMI number. It was a reaction to that piece of U.S. economic data. I don't even. Is it a sell-off? It's 0.4%. I mean, my attitude is, listen, there's going to be pullbacks. You're going to get these numbers. They're going to get people squirrely. I believe it's almost impossible to be short at the right time and make money, unless you're just lucky or extremely, I think Ilya over at Overtime does an interesting job just to keeping these sort of tiny short positions on all the time and then scales into them when the chart opens up. But I think you're much better served to look at any of these down days, like the one that we had yesterday, as an opportunity to get a bigger position in Meta, get a bigger position in Apple. I mean, I think if you're looking for a more cautious worldview and still want to be long AI, I think it's Apple and Tesla, who are the two that haven't moved. And if you're feeling a bit more gregarious and aggressive, as I am, then I think you go straight at them and get yourself some Microsoft, get yourself some Meta, and just calm down. And I think that this is one of those situations where excess thinking, I believe, creates more issues than solutions. Because when you think, like this, again, not to go back to the conversation Ellie and I were having last night or yesterday afternoon, there's 1,000 problems and they're all credible, right? The Fed rate cuts are this, tariffs are inflationary, the jobs number is squirrely, on and on. Yes. And I believe that those problems will manifest, but I believe the economic metaphor that's popular in these situations is a K-shaped recovery, where there basically is a small group of individuals and assets that explode higher, and everybody else gets screwed. And I believe that's what we're in for here.
So, all that you said, along with, parking economics on the side, and data, also the fact that, we've had, all these huge gains. I mean, Palantir up more than 7% after that huge spike in its revenues, citing astonishing impact of AI on its business, and all the gains that we're seeing across the semiconductor stock space as well. What you're saying is, you know what, guys, we could grind even higher.
I think we will grind higher. I believe that the momentum, I think AI is a supernova, financial supernova. And I believe that it will blow everybody's mind. I think that the returns, whether it's Palantir or anything else, are going to keep on keeping on.
And you don't think that the strong earnings season that we've seen so far, S&P 500 still on track for that 9%, earnings growth. That's almost triple the forecast before the earnings season started. You think that this is not, frothy. It's going to continue.
It's obviously frothy. It's obviously exuberant. It's effervescent. It's a supernova. It's not. I'm not suggesting that we are not at extremes in terms of rational analysis of forward multiples of expected income, revenue, et cetera, et cetera, et cetera. I'm saying I believe the power of the enthusiasm underlying the frothy, effervescent supernova is not to be messed with. And I just can't imagine why you would try to get on the other side of it. It's not that there won't be a sell-off at some point, someplace, somewhere. But I mean, when I saw those Meta earnings, and they were so much bigger, the numbers were so much higher than the forecast. It reminded me of a couple of years ago when the street had no idea what was happening at NVIDIA, and NVIDIA earnings would come out at $1 million, billion, jillion dollars, and it would be 100 times the forecast. Or I'm being dramatic, but it would just be totally detached from any set of expectations, and you'd have this giant company stock move in a way that is without precedent. And I think we just saw that same bell get rung at Meta. And I think Meta is the bellwether for second generation, or I'll call it applied AI. And I believe that the momentum coming off of that for the second half of this year is going to be spellbinding.
I agree. So, I kind of talk about this every time I say to someone, if you're thinking about, investing in these companies, way back when Meta was around 60, we looked at all the programming, right? We're testing away, and you think, wow, this is good, but it still is a bit buggy. And the language, the LLMs and the prompts, some of it has a good go at it, but it's not that precise. And then every 3 months, it has another leap forward, right? Every 3 months, and now it's getting pretty good, I have to say. Testing, building artifacts and building prompts, and then using the language prompts as well, using that to refine it. What's interesting
and
is...
AI agents, I just think everything about it is much more than anybody really... I won't even say that. I think the stock market understands how big this is, and I think that's the reason why these stock prices are behaving the way that they are, and I think it's the reason they will continue to behave this way. And I believe that there's lots of room for rational discussion as to why these stocks are overvalued, why the economy is weakening, why the tariffs are bad, why the inflation is here, and I believe all of those things are true. But in this particular instance, I don't mean a broken record, but I believe that there is an overwhelming force that is the financial consequences of the explosive growth and explosive rate of change in artificial intelligence.
And I'm even wondering if this, supernova that you have described it as is the market knowing that we are now moving swiftly towards the agentics AI, right?
We are
already, So what? I'm going to be devil's advocate now because I, always like poking holes in theories. I like it even more if you trader friends can poke holes in my theory and Dylan's theory as well. What is going to be the call your mom moment, right? What is the black swan in all of this? In your mind?
I mean, I guess you'd need to call your mom once the agentic AI coordinates a massive fleet of murder drones and starts coming after everybody.
And also if we have, a situation where you and I look at our bank accounts and all that's like zeroed out because the AI has discovered a way of infiltrating that.
I think that the obvious thing to worry about in terms of calling anybody's mom is all the horrible things that AI can coordinate, whether it's making every car on the road go left at the same time, emptying every bank account in the world, or a flight of bumblebee-sized murder drones that are targeted to every iPhone in the world or every mobile device in the world. I mean, clearly this entire artificial intelligence thing is idiotic and self-destructive and creates catastrophic risk for everybody on Earth. And clearly nobody's going to do anything about it.
Yeah, I remember speaking to you way back when, and you said, you want to be clear, you're not happy about this, but you're right, the AI party continues, and no one's going to do anything about it. Shrimp Fred saying the AI has cleared off with all your Bitcoin. Is that via Coinbase? So speaking of which, I have seen, you talked about drones. I have seen, and I haven't had a second source on this, whether they are fully deployable, but you talked about bumblebee-sized drones. Let me just show you Palantir, and let's whack that chart up because we have caught short saying that you've been buying Palantir since it was 23, is that right? Just bring up the chat. 23, well done you, my goodness, if you've had it since 23. And one of the things about Palantir that a lot of people don't realize is that it is the eyes. So it enables, especially in defense, it enables the sight of the type of software that is used in defense. So have you heard about these drones that are even smaller than bumblebees? They're kind of like minute size to the point where you can't even see them. Think Ant-Man.
Like mosquitoes?
Yeah, like wasp. And I've seen one video, but can't verify just yet whether, these are deployable. Like Ant-Man, the movie. And wasp.
No, I mean, I think that the sort of swarms of mosquito drones are available.
Yeah. And so, that will be a true game changer in military warfare, right? Other thing too that really piqued my interest whilst I was away is the fact that, not only are the stocks edging higher, but I also noticed whilst I was away that, it happened in a time when gold is still, staying very close to all-time highs. And so we're almost seeing, risk on continuing, even though we have, gold very well supported still.
Yeah, I mean, I think risk on is the posture of the world. And I think that's why it's so tempting to look at all of the lousy economic data or that's why the market had the sell-off. Obviously, the market is frothy and risk on and even extreme. The only question is, do you dare disagree with that or not? And I've come down very firmly on the side, not to say that the values are justified, but we're in a risk-on world and the enthusiasm is overwhelming.
Lots of chatter earlier on as well about the incoming earnings that we've got today. So we've got McDonald's. Rich says he loves a McDonald's and, loves having at least one double patty beef burger with ketchup. I think it was once a month or something. I then asked someone living in Milan, now that I know how good the food is over there, do you ever have a McDonald's? You've got one near to the Duomo, which I noticed had everything from pistachio ice cream to tiramisu even. This is how the Milanese McDonald's is.
I'm not a customer, but I have no issue with it.
Let's have a look
And
at
I
it.
always, believe in it as a principle, but it's not, I don't believe it is, it's not about the taste or the quality. I don't believe it is, how do I say this? I don't believe it is good for your health.
Let's take a look at McDonald's. Not good for your health. Are the shares going to be good for investors' health when they're out with earnings later today? What do you think? I have a feeling they are going to potentially give some rather poor numbers, given they have been struggling, even on the, diversifying their menu so that it's faster and also delivering to the lower income segment.
Yeah, I think that this is not a McDonald's world right now. I think that, I think you even saw, what was it, Chipotle? Like, there's just some other fast food names that are doing a higher level of higher quality, higher just higher, better food. And I think that McDonald's is generationally, is generationally at risk, I guess I would say. I think that as people, that the younger generations, I think, are less McDonald's customers.
I mean, it did try to diversify, and I noticed in Milan as well, it's got those fast kiosks and fast cafes.
No, I know. We've seen it, but I mean, who are they kidding? Come on. These people are French fries and Big Macs. I love them. I like French fries and a Big Mac. I don't consume them, but I have, and I understand how delicious they are. But you're not going to redo the McDonald's.
Very clever person on the chat as well,
it.
saying that it's even the kiosk food is actually not cheap. I agree with that. It's actually not cheap by any stretch. CP always saying, brother, it's always going to be a McDonald's world, my friend. It's the Golden Arches, the company which perfected a consistency of products. We know there's a tagline for that. CP always also saying you can't go a year without watching a movie with the Archers in it, and you can't even watch Coming to America without having a wannabe McDonald's in it. Oh my goodness me. I love that movie.
Coming to America?
Yeah.
You're an Eddie Murphy fan in general, or just that movie?
I just love that movie. I've got good... What do you think?
What about like Beverly Hills Cop?
I kind of know that it made Will Smith, but I was kind of already...
No, Eddie Murphy.
And Eddie Murphy. But
Will Smith was not involved in any way, shape, or form.
Where was Will Smith again? Oh, no, he was in...
Will Smith was smacking Chris Rock and swearing at the Oscars.
Yeah, but when he was a lot younger, he was in a...
Oh, he was the Fresh Prince of Bel-Air.
Yes, that's it. Fresh Prince of Bel-Air.
Yeah,
there you go.
He was the Fresh Prince of Bel-Air.
Yeah, but I am a big fan of Eddie Murphy in Beverly Hills Cop, and I love the soundtrack. Speaking of fast cars, you use Uber? Because...
I do.
Do you expect Uber to do well? Because Uber's out with earnings later today as well. I think that Uber and Lyft are going to do well, given that lots of people, the warmer weather is going to mean a lot of seasonal travel.
I agree with that. I mean, listen, I've done my part to boost the stock, that's for sure. I agree with you. I think seasonally it's good. The only reason I have any hesitation is I really don't feel, I don't know what's really going on inside these companies operationally. Like, obviously demand is high, and that is one piece of the puzzle. I just don't know what's going on under the hood. I guess that's why when they report earnings, we'll see. But if you I would rather own Uber than McDonald's. Let's put it that way.
Yeah, me too. So two things with Uber. Watch out for what they say about their plans for the robotaxi, because that is seen as the next cash cow for them, especially in countries where they have a wide network of super straight roads, i.e. North America. Also, take a look at their investment priorities, because Uber, I'm watching to see what they say about using AI to cross-offer services and products to their customers, which I think they've been really behind the curve. If you look at Grab over in Southeast Asia, they've been absolutely, competitive. You get in and it already knows that Dylan always travels between these two locations and he dislikes McDonald's, so don't even try and offer him McDonald's. But if there's a wonderful Milanese takeaway that he normally eats at anyway, it will offer to pick up that for you, so that when you get into Uber, it's nice and hot and steaming and ready for you to eat in the Uber.
Wow. I mean, that would be because I like the steak Fiorentina, so I think it'd be tricky to put a steak in the back of a car. But I would be impressed.
There you go. Yeah, so take a look at that. So services to do with AI and the autonomous, so the robotaxi strategy focus. Right. Let's have a look at how much time we got, Phil? Right, got 5 minutes to go. Lyft is the other one out as well. Have you ever used a Lyft? I've not used it because we don't really have Lyfts here.
I have not. I have ridden in Lyfts that other people have solicited. I do not have the app, and I do not have a Lyft account. But I have no negative. I'm aware of Lyft's existence. As I said, I've been a guest in other people's Lyft rides, and it has always just been sort of interesting to me that Lyft has done so poorly relative to Uber, actually, because it is really the same service.
Yeah.
It just sort of goes to the sort of intangibles of consumer behavior. I suppose maybe, there's something to do with, I'm sure, with the network effect and scale, and Uber probably has more cars available in more places, all those things. But even I can remember being in San Francisco when both of these companies were new, whatever it was, 20 years ago or something. And they seemed like they might even be kind of comparable.
Right. But yeah,
and then it just became, one was a giant and the other one was just remarkable that it even still exists. Yeah.
I have no idea how Lyft is still, able to compete, but maybe it's got a niche market out there. We certainly don't have Lyft, easily accessible here.
I think people use it. It's almost like people use it as the anti-Uber. It's like a protest. Like, I think that there is a community that looks at Uber as a negative brand signal of whatever that means, and Lyft is the spite company where it's like, I'm not using Uber, I'm going to use this. Most of the people that I know that use Lyft, by the way, based in the Bay Area in San Francisco.
Well, that's
so maybe the people of San Francisco don't like Uber.
Yeah, that's also the area where I've heard from many friends in San Francisco where they've got lots of these, Waymos and robotaxis, right?
For sure that.
Yeah, and that your robotaxi works really well until it gets to a roundabout, because the algorithm does not know when to stop and let the other car go. So if you have like 5 Waymos all together, you tend to have this merry roundabout until one edge is a bit...
They just stay in circle?
They just stay in circle.
Is that an urban legend or is that a verified fact?
It is a verified fact. And it doesn't... It's not such a problem...
The Waymo, the self-driving car... Sorry?
Yeah, it's not such a problem if there are other cars that are not Waymos, right? Because then people will edge forward, right? You're kind of like,
There's some indication, some data can be collected.
Exactly. But when I've been told by many friends in San Francisco, when you have just Waymos all together, then it gets a bit confused. So they're trying to fix that.
Got it. So if you have a pure fleet of Waymos in a traffic circle,
Yeah. Speaking of which, let's cross over to another space that's been really, really hot whilst I've been away. I had a few messages from trader friends on this. So just having a look at Novo Nordisk, because it has had such a huge correction there. Novo Nordisk, of course, the one that makes Wegovy, and it has had to say it's going to cut costs because of all this competition that's coming in from copycat versions, Eli Lilly as well. What do you think? Is this a time to like buy the dip, or do you think Novo Nordisk has had such a good run that it's now just going to be like downwards from here?
I mean, this is the Ozempic maker, I presume. This is
Wegovy,
whatever.
Yeah, but the same space.
Man, I do have no idea. I'm going to go with I have no idea. I mean, I would say that the thing that's most interesting to me with the European pharmaceutical companies right now is the Trump tariffs. Because Trump seems to really have an aggressive sort of financial penalty lined up for the European drug makers. And that's one that I'm not sure that they're going to be able to get out of. And so I think that that's a big problem, not just for Novo Nordisk, but for all of the European drug makers. Although I must say that I was not aware of the precipitous decline in Novo Nordisk stock.
Huge. Yeah, at one point,
huge.
Yeah, it fell like 21%. And the most interesting thing.
Why did that happen?
Because it said, right, all right, guys, we're gonna put our hands up. Competition's too great. We're gonna have to like really cut costs here, and we can't compete anymore. So it had that great first to steal the march, but then it's now starting to really feel the pain from copycats, right? And it fell below.
We're just talking about the GLPs right now.
Yeah, that's right, the GLPs. And it fell when it dipped, right? When it made that huge correction whilst I was away, it fell below levels last seen in September 2022. So a really big move there. So yeah, just a interesting one to note, because the whole expectation was that companies like this that are yet to like really gain market share in Europe are going to continue growing. But the issue now, as you say, with the tariffs as well, there's a lot of uncertainty, and all these copycat drugs, right? Not just from the GLP-1 generics, but also the pill form and the hims and hers that's coming to market as well. But
yeah, I don't know. I mean, that's one. That's why I like the supernova. I don't want to look at charts like that.
And speaking of supernova, we're going to have to love you and leave you, because we are about to get to our next segment. Dylan, always a pleasure. Let us know what you're going supernova on and what you're scooping up. And we
always will
communicate that with the chat. We have Decoding Crypto coming up next. With episode 4 with head of Tasty Crypto's Ryan Grace. So stay right there. Hey, trader friends, welcome back to Decoding Crypto with myself and Ryan Grace, head of Tasty Crypto. Ryan, so good to catch up with you. How are things over there?
And it's great to see you. Things are going well, I suppose, over here. How are you?
I'm really good indeed. We've got an amazing summer at the moment, and when we spoke last, we talked about why crypto matters. This time round, I'd like to talk about how the crypto market is at the moment and how it's going to develop going forward. So, first of all, just give us a rough overview of the state of crypto today.
Yeah, absolutely. So, I think when you look at the crypto markets today, it reflects broader adoption than we've certainly seen throughout the majority of crypto's life cycle. Obviously, it has kind of these hype cycles where you can look at Google search trends and it's more or less popular over time. But today, when you simply track the price of Bitcoin, we're at or near an all-time high. I would argue in terms of price action, the market's been fairly robust. fairly resilient throughout the last couple of months of volatility. You can look at an increase in participation, both from retail investors as well as institutions when we track flows into some of the ETFs that exist. I believe there's upwards towards 165 billion in Bitcoin ETFs alone. ETH ETFs are experiencing positive flows. So there's a lot of participation. There's a lot of activity on chain when you look at fundamental networks or metrics, excuse me. And there's a lot of tailwinds from a regulatory perspective here in the US as well as around the globe.
Now, Ryan, many people watching, the crypto space, particularly Bitcoin, Ethereum, what they're wondering right now is what kind of indicators are you looking at to sort of give you an idea of whether or not it's coming out of a tricky cycle? Some people call this a crypto winter. Are we transitioning, for example, from recovery to maturity in 2025?
Yeah, I think in 2025, it certainly reflects maturity within the market. I don't think that we're in a crypto market, or excuse me, I don't think that we're in a crypto bear market by any means, and I don't think that we're headed into one anytime soon. If anything, this is a rip-roaring bull market. I mean, the price is at an all-time high. The dips are being bought. We have had traditional corrections that we've experienced when we look back historically. Quite often in these sorts of environments, see corrections anywhere near 25 to 30%. You recently had one of those in April of this year, and you had a very robust recovery shortly thereafter. So again, I think we're in a bull market. I think it reflects participation in some of the numbers that I alluded to earlier. But in terms of indicators that I would like to look at to try to get a sense of maybe kind of how the cycle plays out or where we go next, when you look at Bitcoin as a relatively volatile, and I say relatively volatile because its volatility has come down over time. We've come from extreme levels of volatility, well above 100% on an annualized basis, to something today that, while it is at the low end of its range, the volatility tends to trade between 30 and 60%. We've talked about this on previous episodes as well. But given that it is a risk asset, I think you need to pay attention to the rest of the market. It is positively correlated at times, and volatility picks up, you're going to see an increase in that correlation as well. So to some extent, right, Bitcoin's going to do well when the S&P 500, equity prices do well, when the economy does well. And so you want to monitor the VIX to understand, what is the market pricing in? Is there a lot of fear? I think when you see a VIX spike, typically you see a little bit of selling pressure at times. You can see some selling pressure in Bitcoin. So kind of from a high level view, I look at that. But when you look at Bitcoin itself and you try to understand, okay, where are we in the cycle? But Bitcoin market cap dominance is going to give you a sense of the total market cap of Bitcoin versus the rest of the space. It's at 65% right now. So what that tells me is that we're not necessarily in a stage where you're seeing investors go farther out on that risk curve and start to rotate into alts. And these alts could be Ethereum, could be Solana, or they could be meme coins and other smaller market cap tokens. I think, typically in past cycles, you have seen that. It doesn't necessarily mean that you'll see it again. But if you're looking at this as a way to try to gauge where we are, what stage we're in within the cycle, if again, it does play out as it has historically, then arguably from this measure, you're relatively early still, or in an early stage of the cycle. At least that's what this would indicate. Additionally, I look at price momentum personally. And so people have a lot of different technical indicators that they like to use. I personally will look at moving averages to just try to get an understanding of the trend that we're in. And when you measure it that way, again, by most indications, you are over longer time frames still in a bull market. Price momentum is still generally positive. And I think, that's again reflected in the way that it's traded here recently. Beyond that, there's one final indicator that I really like to track, and it's a little bit slower moving, but you'll see a lot of people look at Bitcoin and really risk assets against global liquidity measures. And one of those measures is global M2, or the money supply. And what we typically observe is that risk assets, and the NASDAQ is a good example of this, it's about a 0.95 correlation to what I'm going to discuss here, as well as Bitcoin. These assets tend to track global liquidity conditions. When there's more liquidity in the financial system, on the margin, it's supportive of risk assets, it's very supportive of Bitcoin, And when there's a tightening of financial conditions or there's less liquidity in the system, we tend to see that act as a headwind for Bitcoin prices.
And is that why, Ryan, that when we see like geopolitics and we see liquidity and money come out of the system, then we see downward pressure on crypto, for example?
Yes, absolutely. I think that you'll see that if you look at the last quarter of 2024, we had a tightening of financial conditions. You saw a dip in global M2. And now I need to kind of caveat this with it is on a 90-day lag. So on about a 3-month lag, you'll see that this is going to track it almost perfectly. And so at the end of last year, you saw tightening conditions. It explains a lot of the weakness that we saw at the beginning of this year. And what we're seeing now is you've seen a expansion in M2. And on a forward basis, that should imply, doesn't mean that it's necessarily going to happen, but it implies, based on what we observed historically, that you have much more supportive conditions for risk assets, for Bitcoin, for gold as well, over the next, let's say, few months.
Well, let's talk about layer 2 networks and cross-chain interoperability and real-world case users as well. How are these layer 2 solutions enhancing blockchain scalability and the user experience in 2025?
Yeah, I think let's focus on the user experience first, because what these layer 2 networks do is ultimately make using applications on Ethereum or Ethereum-like chains that use the Ethereum virtual machine. These layer 2 networks make it faster and cheaper. So ultimately, there's efficiencies that are gained. So for developers, they can build better applications. Better applications lead to more use cases and utility, which generally leads to more users, which should increase the fundamental value of the technology. When you think about the growth as a function of a network effect, right, all of this feeds into it. And so layer 2s are a scaling solution for Ethereum. It makes it cheaper to use apps or to trade on Ethereum, where you gain from some of the benefits, the security layer, the transaction settlement process. But instead of paying a single fee to settle a single transaction, most of these transactions are bundled together in some form, and then that package of transactions, if you want to think of it that way, is settled on the Ethereum network ultimately, or kind of inherits the security from it. So it's just a lot cheaper for people to use these applications and to use Ethereum than it has been in the past, which has led to more usage, and I think is a supporting factor when we try to project future prices for Ethereum and other similar crypto assets.
And Ryan, we get asked a lot here about decentralized versus centralized infrastructure. What are the key advantages and challenges of these two infrastructures compared to what you've seen so far, and how does it affect blockchain applications?
Yeah, I think when you look at decentralized infrastructure, the key advantage is that it inherits this feature set of blockchain technology, right? Which ultimately is removing intermediaries from a lot of financial transactions when you look at some of the use cases today. And so it's cheaper for people. It's permissionless. It doesn't necessarily mean that it's always going to be more efficient, but there can be efficiencies that are gained. Now, on the other side of that, today, it's still relatively complex. There are technical barriers for a lot of users, and you have to be deep in the weeds. You've got to be somewhat familiar with this. It's gotten better over time, but arguably it's much less convenient than logging into your brokerage account or going to a crypto exchange and trading through that venue versus using a decentralized exchange or an application that's going to run directly on a blockchain. The difference with that application that runs on the blockchain is that you're not even logging into an account. Ultimately, through a non-custodial wallet, you're taking that account with you, in a sense, and then you can participate, then you unplug it. And so you're the custodian of your assets. If you feel as if there's counterparty risk that exists in the system, this is a way to somewhat insulate yourself from that. We'll see how this all plays out, though, right? Decentralized infrastructure allows for really a developer to build anything that they can come up with. In a sense, it's a sandbox, and you'll hear DeFi kind of referred to as money Legos at times, where different applications can kind of be connected and stacked on top of one another, to create new use cases or gain additional efficiencies. So we'll see how that all plays out. It's still very early. When you look at volumes across centralized exchanges versus decentralized exchanges, we could take Coinbase and Binance on one hand and look at Uniswap on the other. Uniswap is still a small percentage of the total transactional volume that occurs on these centralized exchanges, but it should be noted that it's growing. And I would imagine that as this gets easier to use and we see adoption rates increase, you're going to see the number of people and institutions that are leveraging decentralized infrastructure and blockchain technology for a lot of financial services that exist today.
Right. Thank you very much, Ryan Grace, there for us all the way from Chicago. He's the head of Tasty Crypto over there. Always a pleasure having you on. Ryan, thank you very much and have a good day.
Markets down a little bit. It's Tuesday, August 5th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan.
That's
Here
right.
to take you through the rest of that is where you are. Here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're watching on the platform, Tasty Live. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome. Come over to YouTube. Tell us what you think of this action. What you think of this market that declined after this morning's PMI services report. U.S. economy stagnating a bit, growth coming in, employment falling off, prices paid, highest level since October 22. Not a great sign for the largest part of the economy. Bond yields up and down across the curve, a little bit of a twist with lower yields at the longer end. Gold and silver are able to take advantage of that and climb back from some recent losses. The dollar holding ground, not great, but oil prices drop. And so I suppose that's good news for the Russell, which is the only index that's able to eke out a gain today, up by 0.65%. Otherwise, the NASDAQ is off by 0.65%, the S&P down by 0.45%, and the Dow Jones with a more modest 0.13% loss. Dylan, you the ever optimist here, give us the lay of the land. We were just critiquing the Godfather himself, Mr. Sazonov, for being a little bit too public in his opinion. But you seem to think that it's okay to be public these days.
So how do I contextualize this? I would describe today's sell-off at a high level as bullshit.
Okay. Well played.
I like it. I like it.
When I say that, is that the underlying thesis that I assert is that the overwhelming force that is artificial intelligence, and please forgive me my colorful language, I shan't make it a habit, but I felt it was appropriate at this juncture. I believe that artificial intelligence is an overwhelming force. And I believe that any pullbacks on sort of pedestrian economic concerns of the likes of those who may have left Russia in their youth for the glorious life of the music festivals of Portola.
Happily, so happy.
With great joy and effervescence, I have no doubt.
Oh,
for the
boundless.
Sweet smell of eucalyptus and sourdough bread.
Boundless love for all these things.
But regardless of the glory that they may enjoy on the hills of Portola as they partake of the sourdough and eucalyptus, they still hold an inappropriately pessimistic view of the world as it is portrayed in financial indices. And the reason that they do that is because they look at the world through some basic, practical, pragmatic, analytical framework, which is a source of comfort for them intellectually because they're very intelligent. But their intelligence in this particular instance is a massive liability because of the overwhelming, excuse me.
I love this.
I'm speaking, if you don't mind. Because of the overwhelming enthusiasm and abundance of glory that awaits those who choose to think less and rather enjoy the optimism of the unlimited potential that is a technological revolution that makes the emergence of the internet in 1995 or 94 or 96 or 97 or pick your year in the 90s look like that of a flea upon a horse's ass. Because the transition to artificial intelligence is a moment of historical revolution, the likes of which we have never seen before. And valuation is irrelevant. Basically, a blind monkey could select any of the AI adjacent or directly related names at any price point, and a year from now will make much more money than any fool who attempts to use their intellect, let alone their analysis, to try to trade this market. And that, dear Mr. Vecchio, is what I think on this particular day.
If ever there was the signpost of a market top, by the definition of what a bubble surely is, which is the disconnect of reason and valuation. That was as eloquent a statement of a sentiment peak as certainly I've ever heard.
Well, thank you for your complimentary commentary, which I shan't take with any subtext of side insult that I think was there.
Well, you've been right.
I shall ignore.
There cannot be subtext because until this thing pops, you're right.
If I might refer to my dear friend and perhaps your neighbor, former Fed Chairman Alan Greenspan, the markets, good sir, can remain irrational far longer than you can remain liquid. I'm not sure that might be that's
a Keynesianism and
it's not really a Keynesianism.
And it's solvent, and it's not even. It's debated as to whether it's
anyway. Listen, whatever. Okay, listen. You get my point.
Yes. Well, and
Vecchio's the citation.
And I'm
not here for quotations and citations. That's Vecchio's job. I'm here for a point of view.
And
listen, he's not the nerd.
To your point, that's exactly what we've seen. We have shown the markets.
That is where we are, sir.
Rational.
I would tell you this: you can either be long the AI, you can either take advantage of these idiotic sell-offs. So like, oh my goodness, look at this economic data. What about the PMI? What about the CPI? What about the jobs report? Oh, what about the overwhelming global technological revolution that renders your stupid economic data irrelevant? Good sir.
It doesn't make it irrelevant if you just look at the collective wisdom of the world's largest and most liquid stock market today. It's not me saying it, it's them.
0.4% between friends. It's basically a tip at dinner. Okay, come on. This is not a sell-off.
I mean, in the context of what happened last week, it's a beautiful rejection of yesterday's attempted rebound in exactly the place you'd want it.
Your adjectives are unwelcome. There's no reason to characterize its beauty and or lack thereof.
I'm going to go get the doll, and you're going to let me know where Ilya hurt you today. Okay.
Show me the dollar. What happened with that stupid dollar? Trump.
23,132 on the NASDAQ close. We're up a little bit after hours, back to 145. It's a 0.65% loss. We turned lower from where we more or less bottom out on July 30th, Ilya. Slight overshoot from some of the levels that we were looking at yesterday on Futures Power Hour and overtime, roughly 23,000.
Basically the bottom of that range.
Yeah, 350. S&P was 63, 65 or so. And we failed there. I think the reason and rationale for why we actually did pull back and fail away from these levels when we did this morning is worth looking into. You were mentioning the ISM PMI report, which I think is worth bringing up here on the screen for a quick second. The PMIs, as we often do when we discuss these, diffusion indexes based around 0. If you're above 50, you're growing. Higher above 50, growing faster. Below 50, contraction faster the more you are below 50. So the ISM comes in at 50.1, which is barely in growth territory, if at all. But it's the internals that bother everyone, because the internals, as we look across the board, not only are they mentioning tariff. In fact, let me just search for the word tariff here on the screen. 1, 2, 3, 4, 5, 6, 7 mentions in there. What respondents are saying section. Basically, every response has a tariff notation. It's the fact that the employment gauge is falling deeper into contraction territory, and our prices paid index is now at the highest level that we've seen since October 22, which again, respondents are pointing to as the tariffs being responsible. So what does this tell us about the state of the economy now that we can no longer trust BLS data, as Dylan mentioned in his walk and talk rant this morning on Twitter? And are we now looking to the PMIs as our North Star?
All the data is bad. Anyway, sorry, go ahead, Ilya. Sorry.
All the data is bad.
All the data is bad.
We already said this yesterday. We already collectively agreed we're using bad data, but we're agreeing to use bad data because it's mutual agreement.
Yes. I think there's an interesting dichotomy here, and you have to give the devil his due.
Thank you.
There were two things that happened.
Assuming that was directed at me.
There was two things that happened today. And you can pick and choose your data. There was the PMI numbers from ISM, which we're looking at here, which were god-awful and disappointing across the board. And indeed, the manufacturing component of this same survey that came out last week, that also disappointing. And you can look at that, and those of us of the bearish mindset can go, see, told you, ha, ha, ha. And then you can look at the S&P version of this same data, S&P Global. They came out with their version of PMI data. And on that score, the U.S. economy is near the peak of last year's explosive growth. Now, that survey was conducted much earlier. It's a different sample space. It's a different time that most of that data was collected. It was much earlier in the month of July. So you could say, okay, the ISM is more current, it's more recent, or you could say that the S&P Global is a better data set, and most PMIs around the world do indeed come from S&P Global. So you could look at that and say, well, that's wonderful for the bullish view. Forget this ISM, whatever. You might also say, well, what does it all mean and what does it matter? One thing is showing you this, the other thing is showing you that. Who cares? It's all bad data. It's all survey data. It was all screaming recession in February and March. Obviously, that didn't happen. It was more about the way that businesses felt, not what businesses did. Maybe this is something we can just write off altogether. And in my mind, there is a very simple way to kind of cut through the noise here and see which thing did the markets actually trade on today and what thing they actually paid attention to. And it's the ISM data, full stop. When that data came out, the stock market fell. That's it. And if you look at what happened with Fed rate cut odds in Fed funds futures, they've moved more dovish. And they've moved more dovish for next year again, not this year. This year, they're basically stuck at where the Fed thinks they're going to be. So very clearly, the markets looked at this ISM data. This is not anybody's opinion. This is the price action itself. And they said, uh-oh, higher prices, weaker employment. The economy needs rate cuts and the Fed won't do them. Bad. Now, does that necessarily give you a narrative to extrapolate into collapse? Of course not. Does the economy stop mattering because we have a hype cycle in AI? No, obviously not. That has never happened in history ever. And we have had more transformational technologies than this, like railroads, like the steam engine, which quite literally turned human history on a dime. One might say the Industrial Revolution of the 1860s shaped up to be a much bigger net change from feudal-like conditions, let's say, to what we know today, Renaissance notwithstanding. And did that change the dynamics? No. The dynamics are still as they ever were. You get a hype cycle, that hype cycle implodes, and then you get the real adoption phase. And all the promise that Dylan is talking about is realized.
Vecchio.
Certainly I don't debate that. It's the valuations and the timing. Would I buy that narrative here now after everything we've seen? Not with your money.
Before we get to that, there's a bunch of earnings that did come out, and while some of them matter, some of them don't, I do think they're worth touching on. Snapchat, snaps out here, share prices, off 14.5% here after hours. Revenues were in line at 1.35 billion, but their adjusted EPS missed at negative 16 cents versus negative 15 cents expected.
No one cares about this company. Do you not agree?
No, I disagree completely, because this is the to quote you, the bullshitty social media company that okay, so a few months ago we shared a deck, I think that was sent over from Goldman Sachs or Morgan Stanley, I can't remember, but it was basically like, if TikTok were to get kicked out of the US market, where would those users go? And they had these different funnels for the different features that TikTok has, and it's like, well, you could go to Instagram as like the next easily available substitute, or you could go to Threads, or okay. At the bottom of every single category was Snapchat, right? So it's the one that
reinforced my point. I thought Snapchat was already a write-off.
Well, this is why it matters. When Snapchat, it's typically the first of the social media companies that see marketing funding get pulled. If companies are going to be pulling back any sort of spending and thinking about their budgets in a more austere kind of manner, they'll continue to pump the Facebook ads. They'll continue to pump the Google ads. They cut the Snapchat ones first because they have the lowest ROI and whatever of a user base compared to the other social media platforms. So it's canary in the coal mine. Frequently, it's been viewed as over the years, and maybe the guidance, which is right in line with the expectation, there was 1.48 billion. They're guiding at 1.48 billion. You know, they're not selling any dreams over here right now. They're not painting a brighter future than what the street expected.
But I'm just understanding your logic. You're saying the weakest of the sheep. If the weakest of the sheep is weak, therefore what?
If this was
if the first of the sheep that you fear might get slaughtered gets slaughtered, you start worrying about the other sheep.
But if there's one sheep that's to be slaughtered, is it not this sheep?
It feels like it is, and you know,
think
and
that's fair.
there's a proper caveat here, which is feels like this happens every single quarter for Snapchat, where they just totally bomb out. The market, the market crawls back a little bit between
I feel like this
earnings.
only exists to support that guy's lifestyle. I forget his name, that LA kid. I feel like this just exists to support that guy's like Instagram with private airplanes.
So Galaxy Digital is also out here. This is another miss. 8 cents EPS versus 10 cents expected. Not fantastic, but share price is off barely a little bit here after hours. SMCI is out as well, which under $50 a share after closing at 57.26. Sales miss. 5.8 billion versus 5.9 billion expected. EPS miss. 41 cents versus 44 expected. Their sales outlook miss. 6.5 versus 6.6 billion. What about their EPS outlook for the Q1? Miss. 0.46 versus 0.56. So SMCI down, not great. Galaxy off a little bit here. HIMS was yesterday, right? All right, Dylan.
Other than SMCI, I think it's very easy to take Dylan's perspective here and say these are not the names that are going to make or break the story.
I think SMCI is the most relevant of the list.
Yes,
for sure. For what you're referencing,
for sure.
I would point out the broad picture here about earnings so far right now. This comes from FactSet. How have companies been treated by the market, depending upon if they're?
I think this is actually a huge point.
This is.
I was looking at this too.
Yeah. So if we think about how the market's been treating winners versus losers, winners are. The 5-year average in the 2 days before, 2 days after a company beats on their earnings, it's a 1% gain. This year, it's about a 0.9% gain for the second quarter earnings right now. If you're a company that has missed, however, missing has been problematic, and the stat just, there it is. The 5-year average, again, 2 days before, 2 days after the earnings release, the 5-year average for a company that misses its earnings is minus 2.4% during that window. So far through Q2 2025, it's an average price decrease of minus 5.6%. So companies are being rewarded less than usual for beats, and they're being punished by twice the degree that they normally would be for misses, Dylan. And I think that just goes to like one of those hallmarks of, is this market overvalued? Is it oversaturated? Are we priced for perfection? Right? It's like,
I agree with that. I mean, I think that's self-evident. That basically,
can I give an example though from like real life?
Sure.
Hopefully Dad's not listening. Where I went to college, you're only supposed to take 4 classes a semester. One semester I decided to take 5 because I was working out this whole thing where I'd have fewer classes by the end of senior year. I'd be living in my fraternity house. I don't want to do one.
A big fat party. I understand what you're thinking.
Right. Okay. So I take 5 classes that semester, and I get 4 A's and 1 A minus, 397 GPA. And my dad said, "Yeah, I thought it was pretty good." And my dad said to me, "That's it." And it was kind of like, okay, this is like the best you can do. Pat on the head for 4 A's and an A minus, right? And it was kind of like an FU. And that's kind of how the market's behaving right now. Like nothing is good enough, right?
For the big man.
Yeah, nothing's good enough for the big man right now. And we're seeing the Nasdaq.
If you take a look at the S&P
right now.
The S&P, actually, it's a really interesting thing because this exact dynamic really starts with that happy days news that the EU and the US reached a tariff deal, which should be exuberantly good news. Well, yeah, apparently the EU agreed to eat a 15% tariff, at least for now.
Which I'm not happy about.
I mean, they're not happy. They're rightly not happy, but they do reach a point of some certainty between what is the number 1 and the number 2 most important consumer market in the known universe. And from a global growth perspective, this is incredibly positive. And the market goes, meh, and does nothing and fades it. And ever since then, the GDP number isn't good. The Fed is disappointing. Then the jobs data really spooks everybody. But this idea that the market is not responsive to good news, that it doesn't rally when the news is good. This is that thing that you see as the mirror image of the dynamic that Dylan you're describing, which is the market is so happy with what is occurring that it just doesn't care. Bad news, whatever. We're starting to get through the looking glass, seemingly, and get the other side of that exact thing, which is the market stops caring about good news and starts saying, you know what, whatever, we're going lower. That's the hallmark of a market that is completely convinced in where it's going, whether up or down, when it decouples from news. And what we've seen in this version of the decoupling isn't that bad news isn't working and the market is rallying in its face. It's the opposite. Good news isn't working. And the money is coming out of the markets even when you'd think it shouldn't.
The dynamic in 2023, Dylan, when the Fed came out and they were like, "Oh yeah, like we're don't worry, we're not gonna hike rates again." You know, the market was. Yeah. Go ahead.
I believe I am 100% correct. I also believe Ilya is 100% correct. What I mean is the AI supernova is upon us.
I agree, actually.
The ability to value the AI supernova, impossible.
I agree with that too.
The present value of the current and future AI supernova, unknowable, impossible. Look at the meta forecast.
Totally agree.
Idiotically wrong.
Totally agree.
Look at the missing of the boat at Apple. If I was to say to you, there's going to be an AI supernova, do you think Apple Computer will benefit? You'd be like, oh, hell yeah. They're going to be front and center. Okay, well, maybe not. Guess who's front and center? Microsoft. Left for dead decades ago. All of a sudden, they're the top of the heap.
Mm-hmm.
So I think that this really comes down to your opinion, Vecchio, as to who's right. The supernova, as advocated by your friend in Milan, or...
Go ahead, finish your framing.
The absurdity of the present value of the supernova as advocated by your friend in Portola.
I mean, I think the only real difference in our perspective is sequencing and timing.
And present value. It's just what is the present.
That's it.
And I have no credible opinion of the present value, but for my belief of the idiocy and insanity of man, which I believe.
And for me, I completely see that, and clearly we've witnessed it time and time and time and time again. The history of financial bubbles tells us over and over again that things can inflate more than anybody ever expects, and that they'll snap at a weird time when nobody expects them to, and later than everybody expects them to. I mean, you don't have to go far. Go rewatch the Big Short and watch Christian Bale lovingly portray Michael Burry freaking
by
out.
nature, in their nature though, don't bubbles have to go beyond what would be rational? Because if they stopped, then
that's what would make them a bubble. Yes,
right.
And so I think
that can only be determined retrospectively.
Right. And so in that sense, all you can do is trade the price action.
Just get long and hang on, brother.
What would Soros say, Ilya?
Time-wise, yes.
When George Soros sees a bubble, what's the rational thing to do in his eyes?
Run it up as long as it'll run up.
Buy Meta.
Run it up as long as it'll run up. And in fairness,
Microsoft put spreads.
We've watched it, but you have to, I think, disassociate what you do as a bet on the long run transformation of this, which, by the way, I am in all of my non-tactical, non-45-day or 50-day DTE, not my active portfolio, I'm very long the stock market and will be probably for the next decade, 2, 3, whatever.
You know, Dylan, that all the ESPN commercial. Yeah,
It's
you know
it's
that
a
ESPN
different
commercial.
time cycle.
With
But
John Clayton.
As a
This is-
trader,
oh, yeah.
you have to look at this and say, this price action is telling you that we are becoming unresponsive to good news. We broke down from an uptrend last week. We retested it over the course of the past 48 hours, and the retest failed. That's what is on the chart currently. So you trade that from a trading perspective. Because the washout will not care that eventually the great and glorious AI future will indeed materialize. The washout on a trading basis will take your money all the same, as it did in 2009, as it did in 2000, as it did in the 80s, over and over and over and over and
When's
over
it going to
again.
do it, Ilya? When?
Nobody knows. That's why you have to
exactly. That's
trade the price
Nobody
action.
knows.
That's why you have to trade the price action. Exactly.
Mm.
And the price action says this could be the beginning or maybe not, which is why you have to trade it very carefully.
Mm. Becky, what are you doing?
What am I doing here? I'm leaning a little short.
Are you short the supernova? Are you nibbling on these sort of Russian expatriate turned eucalyptus sniffing Portola music listening man's?
So let's say in July I was doing something like a synthetic short calendar call spread. So if I'm long a calendar call spread, I'm long the longer dated option, short the call and the shorter dated option, right? But I was doing that basically the opposite. I was running up the NASDAQ calls and call spreads while holding on to these late August puts in ES. Not perfect. It kind of feels like that's, if I want to be bullish here, I'd want to have a long calendar call spread strategy. I'd rather be short the market in the short term. I'd rather be short the 24,000 call in NASDAQ that's expiring in, however long. In this case, we have the 23,200 here. But something like this, short the 17 days, long the 48. I'd rather be longer duration towards the end of the year than deal with whatever data digestion that we have to go through as the economy reorients itself around tariffs, which again, if you're to believe the PMI data, the non-farm payrolls data, the ADP data, everything that we've had into the stew, viability or not, directionally things are slowing beneath the surface. That's why we look at core GDP and not just like the top line figures. We've gone from 2.9% to 1.9%, now to 1.2% in core GDP. So consumption and investment is slowing down over the past several quarters. And during that time frame, inflation has moved up from 2.4%, now back closer to 2.9. So higher inflation, lower growth as the economy is digesting the tariffs. Seems really textbook.
Mm-hmm.
So if we're going to go through this now, Dylan, where Congress is on the Epstein recess right now, the Fed doesn't have a meeting this month.
Great way to call it, by the way.
That's what I'm calling it. They adjourned Congress early so that they wouldn't vote on the Epstein files. What else would we call it? Yeah, I'm pretty sure my congressman might block
have a partisan bias as a Northeast liberal fellow. I guess would be a nice adjective to call you.
Call me a father of a young girl instead. That's my perspective on this. I digress. Congress is not in session right now. We have the Federal Reserve. That's current. Federal Reserve is currently on its vacation. They have Jackson Hole later this month, but they're not going to be changing policy anytime soon. If there was a window with which the market could soften up for whatever reason, seasonals, this could be it. So if I think the calendar call perspective, I want it, Dylan, if I were really you and doing this in a responsible manner, and you and I from time to time.
Question for you is, what part of the word supernova do you not understand? Something to reflect.
No, but you bring up a valid point, and this is the reason why I think that, in a K-shaped recovery world, where AI is a layer on top of the economy that serves the financial and cultural elite. It need not worry itself with declining real income levels for lower and middle income consumers. And that is a horrific, scary proposition for how the economy and society could evolve. But it would mean that even if AI displaces people because it does produce this gigantic productivity boom, companies' earnings stay intact. They reduce their overhead for labor. Profits surge, margins explode, unemployment goes up. And in a world where unemployment's rising, what does that do for asset prices if the Federal Reserve has to keep rates low, or the federal government needs to do a UBI program or a public works
UBI,
program?
brother, UBI solves UBI is the hidden solution to all your problems.
So I just see long-term asset inflation because I don't see this country's political and financial elite doing the things that are necessary to get us on a sustainable course.
But do you think UBI is in the cards in the next 10 years?
In the next 10 years? No. But I would be surprised if it doesn't become a more prominent conversation as we look at unemployment rates for people, especially younger Americans, shoot up, especially for young men shoot up. Unemployment rates for men who are graduating.
Targeted gender.
No, I think you have to be worried about that because the preponderance of historical data shows that countries with high youth unemployment rates, particularly young men between the ages of 18 and 35, have higher incident rates of civil unrest. And I think that for keeping our society bound together,
maybe they should get a job.
I don't think that our society has properly catered to the changing dynamics that young workers, particularly young male workers, have faced in recent years. And it's not simply as getting a job, it's about the place in the world, what society has to offer us. I think the prevalence and the proliferation of gambling-like tendencies and influencers is all about getting rich quickly because the American dream has failed for so many people. There's no more ladder.
You're saying that the culture for young people, men and women, is a lottery culture rather than a work culture.
Well, because the upper crest of society has geared a tax system that shunts wealth from the lower middle class up to the upper class, particularly from younger workers to upper workers.
Advantage of the old.
Well, I'm paying a higher effective tax rate than people that are 65 right now in my local area.
The entire system is designed to benefit the 75-year-olds at your direct expense.
Because the system is designed for people to retire in their 60s and die in their late 60s and not live on until they're 85 or 90, which is wonderful.
Asset owners to exploit your willingness to pay a high tax rate and W-2 income to be treated like a punk while they live and play golf.
Yeah.
And carbon load the atmosphere such that you roast to death in the summer.
And I'm actually very optimistic about where this goes eventually. Because I think that
because you're an asset owner.
No,
who lives in Silicon Valley.
Yes, but I don't think where it's going is going to benefit me as an asset owner. I think it's going to benefit my children more so as the beneficiaries of what Dylan is describing. I think one of the things that the AI supernova does eventually is reorganize this in ways that we couldn't begin to fathom. The same way that railroads and telecoms reorganized their societies in ways that couldn't.
But the fundamental difference is that we have the transformation going right now, and we're building data centers, and we're not creating more jobs out of building those data centers by high degree, even though it's sucking up more electricity, even though it's sucking up
2 seconds into what this transformation is going to be.
I really, but like the auto industry, you don't have diners without the automobile, right? You don't have auto repair shops without the automobile. We've now had
getting rid of the automobile.
No. But the point is that once the automobile jumps into existence, a whole other offshoot of industries have to pop up.
Of course.
What other industries have popped up that have provided jobs?
We won't know.
Universal basic income. There will be no jobs.
I don't think I'm signing up to that idea.
It's just going to be music in Portola and free money from the robots.
I mean, as fantastic as that would be, I think
Sounds like a boring life.
What we're witnessing politically, socially, demographically is the end of an era that started somewhere around the mid to late 70s going into the early 80s. That era had as its job the solving of an inflation issue. That solving of the inflation issue at the corporate level, at the government level, led to tax cuts and deregulation and the formulation of corporations as fundamentally shareholder oriented, which of course means reducing costs, increasing profits. All of that gave us globalization and other mechanisms by which costs could be reduced, because the problem that world faced was an inflationary one. And now we face a different issue. And the baby boomers are leaving the labor force, and they're giving up the reins of power, finally. And
Are they?
Gen X is tiny, so they're not going to be replacing all these retiring baby boomers because there's just not enough of them.
It wouldn't be Gen X unless they're overlooked. So
just calm down about Gen X. Let's not be speaking about Gen X inappropriately.
Dylan, you are a unicorn among Gen Xers.
There's just not a lot. They're a small generation.
Well, I account for more than one. I'm a multi-person. I have a lot to offer.
We love that about you. Trust me.
And if only Euphoria sneakers were available in the US, we would wear it proudly.
Okay, let's not bring the sneakers into this. There's no one talking about sneakers here. I'm a barefoot. I don't even like to wear shoes, but that's a different issue.
Okay.
What we're witnessing across the entire landscape, politically, socially, demographically, is the handing off of one 50, 40-year order to the next. The ridiculousness, by the way, of the last election, where both sides come with equally old ideas and nobody likes it, and a third of the electorate doesn't show up because they can't be bothered to listen to the same thing from both sides that they've heard for 40 years, that they're all unhappy with collectively. It's a wonderful example of what's going on here. I think with AI, as with other examples of that kind of a technology, it will create more jobs than it destroys. It will solve more problems than it creates, but it will create issues, as it does every time. And in 40, 50 years, we're going to have a massive issue, and we're going to have to uncoil that issue. And that issue will be the thing to resolve for that generation. But I actually agree with Dylan that this is a very optimistic moment for the world, because we are probably at one of these important inflection points in history, where the festering issues of the past 10, 15 years have finally come home to roost, and we're going to clear house. And everybody is so upset with everybody on every side that what's going to happen is we're just going to change the paradigm. And things that before were anathema are going to become how we solve things. And we're going to come up with new ideas. And
meaning UBI.
Meaning all kinds of things. UBI is certainly, I think, on the table. I don't think that's where it's going to go ultimately. But to Chris's point, I think it's going to be very much a part of the conversation. It would be smart to deal with AI better than we dealt with globalization, where the majority of people benefited and a loud, ignored minority was, to the pain of everybody, left to hold the bag. Were we to just spend 30 cents of every extra globalization dollar to take care of those folks, maybe we wouldn't have this mess, but that's not how history works. So I'm very optimistic. I just think the valuations are off, and we need a cleaning of the house before that optimistic future comes.
Cleaning of the house. Hear the Soviet anthem playing in the background.
I would suggest that rather than a cleaning of the house, that there might be a tanning of the supernova. And one
that seems like the most likely outcome here. Forget like the short-term path of the market in 5 years. Is the S&P 500 more likely to be at 3,000 or at 9,000?
Well, the frustrating thing I think for Ilya and I is we both completely agree with one another, and yet we completely disagree with one another.
So what's the trade for this week then, Dylan?
Buy Meta, buy Microsoft, buy Tesla, buy NVIDIA. Don't think about it. Don't overanalyze it. Don't talk to Ilya. Just calm down and sell some put spreads in the tickers I just gave you and be happy when you have more money, and then just enjoy yourself and maybe have some steak.
I made some pretty good filet last night. Some of the names from the basket that we put together.
Not to talk to Ilya because he'll make you doubt yourself.
Some of the names that we mentioned in January when we were looking at our phase 2 AI basket: Amazon, Meta, Google, Palantir, Snow, SPGI, FDS, IQV, UNH, and Axon. One of those is doing very poorly. UNH obviously has not fared well in recent months, but Axon, on the other hand, has been punching well above its weight.
UNH. I like your Luigi trade, which is either it's coming back up or it's going away. But anyway, you're saying something.
Well, if it's going away, it's worth more than the sum of its parts right now. Right? If you were to break it down by, think of it as a conglomerate.
Remember, the Luigi defense is that he had it coming. The defense is not that he didn't do it, it's that he deserved to be murdered. So the fact that the defense attorneys even think that that's a viable defense tells you how horrendous UNH actually is. Anyway, I digress.
No, it's remarkable.
Well, and the fact that there's people in the country that are like, oh yeah, that makes sense.
No, not just people in the country. The most elite defense attorneys in the world are like, okay, we cannot claim you didn't murder this man because you're on videotape murdering this man. So our only potential defense is to say that this man deserved to be murdered. And we believe that there's a credible case to say that.
I've been arguing with people about this in Reddit when I see people celebrating the murder of the Blackstone executive last week, Wes LePatner. Apparently she was attributed to having lived in my town. So this was like a whole thing up here. Oh my gosh, can we figure this out?
Cinnamon buns.
No, she had no family up here. So we don't know why the local news stations were interviewing people in town about her. Either way, though, like signs of this being some sort of class revolution. An innocent woman is shot because the guy went to the wrong office looking for the NFL for his CTE. Like, and we're celebrating this. Like, but isn't that a sign of the social decay that we're talking about, Dylan? Where like you have this K economy where there are things that are happening and the market's making money and society is moving on, and there's a whole bunch of other people who are just increasingly getting left behind.
Yes. It's the sign of where the breaking point from the old order to the new one occurs. And you could be optimistic or pessimistic that it's going to go to something that you want to see or don't want to see. I'm optimistic that the US as a unique phenomenon in the world will reinvent itself in a positive way once again, as it has every other time that it's had one of these sort of inflection points, but they are always painful. I mean, one of them was a civil war, for heaven's sakes. And that's not what I think is coming. Let's just be clear.
Let's not. What kind of American are you, Ilya?
A very optimistic one, and a very patriotic one.
Eucalyptus sniffing one.
Yes, it all looks all right over here under the eucalyptus trees.
I was referencing Jesse Plemons' character in the movie Civil War, which is like a famous meme gag from that movie that came out a year or two ago. I digress. Top headlines of the day. Hey, he was excellent in Breaking Bad, and he's married to Kirsten Dunst, which is, I think, right? I don't know. I have no idea. Jesse Plemons. I don't know, but that's just why I don't know why that's in my head.
The young guy that with Breaking Bad guy, the redheaded guy, that good actor guy.
Yeah.
I like that guy.
Yeah.
I don't know his name.
Dylan, to your point about this AI super cycle, OpenAI today Supernova. It's releasing this lower cost model that's going to be hosted on AWS that should allow it to compete with Meta's Llama and DeepSeek's deep research models a little bit more effectively. There's obviously not a clear path from A to B here, but I find your relentless optimism somewhat endearing.
Thank you.
If only to say that I have never felt as bullish as you have.
About anything ever.
And I will say, given the tone and tenor of some of the comments that have come in over the course of today, and not just today, in recent days, people have been saying like, oh, Vecchio and Radigan are so arrogant, like this thing is about to come down. And it's interesting not being the person carrying the flag and listening to another bull disparage a bear like that.
Are you diminishing me in some sort of rhetorical, dismissive manner at this juncture?
No, it was like an outer body experience.
Okay. You're saying that this is the first time since we've been a trio that I have outbulled you as the bull.
I think so.
I think that's true. And I believe we're in the supernova, and I believe everybody should just calm down and buy your Meta and buy your Microsoft and buy your NVIDIA and just ignore Mr. Eucalyptus and enjoy yourself and be happy with your stake money. I think it's very simple.
And by the way, that is completely possible. And if I thought that it wasn't, I would be over indexed short, and I am not.
Because he's fearful of Mr. Stakes and Eucalyptus over here, and he knows
for the exact reasons we've been saying. Because this thing, for no reason discernible to anyone,
that's right,
can blow out bigger for who knows how long.
That's right.
Which is why, and then crash. Which is why you also trade the price action, and the price action since the beginning of July has been maybe it's out of steam, and we'll see.
It could go on for years. This
or blow up tomorrow is my point.
But the odds of a blow up tomorrow are much low. The payoff. Listen, I would love nothing more than to make the bear case. Obviously, nobody knows how valuable the supernova will be, how soon.
Of course.
So there was an analyst. This is Dylan. I want to bring something to your attention about why this money has to keep going. This was sent over by. I saw this from Ben Badger, and he's a CEO and principal analyst at Creative Strat. Creative Strat is a market research firm. Okay. This comes from an executive at Schneider Electric, which apparently is a key player in data center buildouts. Quote, AI hardware is rewriting the data center energy equation. One rack of NVIDIA's Blackwell 2 now draws roughly 180 to 200 kilowatts, driving whole site demand from 300 megawatts to 1.2 to 1.5 gigawatts, a 4 to 5 times jump in a single architecture cycle. So these power spikes stress 30 to 50-year-old transformers and distribution assets that were never designed for such volatility, forcing these utilities and operators to rethink their reinforcement and on-site generation strategies. What this effectively means is that you are seeing a constant turnover here. There's a lot of other information within this about SMRs and hyperscaling, which I don't think is prudent to the conversation. But what they point out is that ultimately chip roadmaps and software volatility keep CapEx on the accelerator in the short term, with each GPU generation delivering higher density. Data centers require continuous electrical and mechanical retrofits. Hyperscalers are blending constant load on sites with burst capacity from tier 1 colos. That doesn't really mean anything to us. But this is like a Ouroboros. They build the data center, right? They're drawing on all this electricity. They now have supply available for consumers who are sucking up all the demand, and a new model's coming out. And so they need to add more energy and more GPUs to build the new model. And it's kind of like this flywheel right now where we're going and going and going. And so why wouldn't there be continuous demand for NVIDIA as inference grows and grows and grows and grows? It's a difficult pill for me to swallow to be structurally bearish on the AI space. That's not to say it's overcooked.
Right, but the reason to be structurally bearish, which I rationally fully agree, with my friend in California is only on valuation. Too much, too soon, too high, too many multiples, too much, too much, too much. And the only reason I disagree is because I don't think we're in a rational environment. I think a supernova suspends logic. I think the meta earnings are the greatest indication thereof. And I think you just need to calm down, stop thinking, stop analyzing, stop doing math, and enjoy yourself.
You know what, Ilya? I think that now that Dylan has brought us full circle to effectively quoting the President of the United States, relax, guy, I think we can leave it there. With that, overtime is out of time for this Tuesday, August 5th. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan definitely in Milan, I've been Chris Vecchio for sure here in New York. Hopefully no more earthquakes. Please stop. We'll see you tomorrow. Quick break coming up next. More Ilya with Macro Money. See you there.
See you there, everybody. Stock markets fizzle after an attempted recovery at the start of the week from last week's bloodletting, and it happens against the backdrop of another troubling piece of U.S. economic data. So what is the U.S. economy actually doing, and how worried do the markets truly need to be? That's what we are going to tackle here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. Let's take a look at what we have on the menu in front of us then, and what the markets did today. We'll, as ever, begin with a look at the price action, see how we got there, and then try to figure out what comes next. This is the current, that is the September contract for S&P 500 futures. And we bring it up because the architecture of these moves today and over the course of the past several days really is eye-catching and seems to suggest that there could be something that's starting to happen here. So these tops right here, of course, established for us a range last week. This was the US and EU deal on trade. We get a gap over the weekend, and that gives us the top of where this range is, and we fizzle. The optimism doesn't last. The Fed right here, that's this third candle in this red sequence here. It's disappointing, but ultimately the price action doesn't find lasting follow through because we get into earnings, and of course then we get this massive gap and the new record high from the Meta and Microsoft earnings, which are explosively better than expected. But that too, the markets fade, and we end up finishing with a lower close than we did before on Fed Day. And then of course Friday last week, there's this explosive sell-off that finally cracks the architecture of this range. Now, that comes courtesy of the jobs report, which we'll take a look at once again in just a moment. But what's critical here is the price action itself. There is a very straightforward stair step up here that develops from these panic lows around Liberation Day tariff rollout in early April. Once the markets sort of digest what's going on and the White House seems to take a step back from the worst of what the markets are concerned about, you get this clean stair step up where former resistance becomes support on a retest. And so here's where you start to see the breakout. You set a higher high, you come back, retest these former levels as support, then set another higher high, retest these former levels as support, set another higher high, establish a range here around these former levels. Once they're taken out, again, former resistance becomes support, establish a higher high. And then here we break the sequence. If these are the previous highs, then we have failed on their retest and broken through. Moreover, when we start this week, the markets rally all the way back up to retest the breakout point for this range, and today we are rejected there. In other words, there is the early indication in the price action itself. Now, before we get to any indicators or news or whatever else, there is early indication here that the price action is beginning to roll over. In other words, that we have a sequence of higher highs and higher lows that has given way, and we are setting lower lows now. Now, it's, of course, very early yet, and we still have this very important level of support, which has been holding since early July at 62.41 or so. But the architecture of what the price action is doing here is very eye-catching, especially since the rollover starts not with a bevy of bad news, but with a bevy of good news that is faded. First, the EU-US deal. Next, those explosive tech earnings. Against this backdrop, today again, the outlook for Fed monetary policy pulls deeper into a dovish direction. We are now looking at 129 basis points in rate cuts between now and the end of next year. The markets are relatively anchored for this year at 50 or so basis points. We can see there's a little bit of fuzz around that. 52 basis points, that's basically a rounding error. And that's in line with what the Fed has been saying pretty much all year long. The real question is next year, and what the markets increasingly see as the likely disconnect from what the Fed is saying versus what they're going to have to do. The markets are now fully priced for 3 rate cuts next year, whereas the Fed has only forecasted 1. And today's data, the start of which is marked off the release by exactly the spot where stock markets start to sell off today, that reinforces this idea. And of course, we're talking about the ISM service sector report. It comes out disappointing, 50.1 on the service sector index. And perhaps the most critical bit here is that the biggest part of the U.S. economy is now at standstill. The service sector, of course, much larger in its contribution to the overall economy than is manufacturing. If manufacturing, roughly speaking, is about 20% of the economy, the service sector is closer to 70, 75, with the rest being ag. And so the service sector is really the key here. And of course, we've seen now a parallel deceleration in both services and manufacturing for quite some months. So it's not as if it is news, really, that the U.S. economy is slowing, at least on this measure. We've seen since the beginning of this year, that peak that you see on the manufacturing sector right there, that's January. And so this has been ongoing now for 7 months. The biggest point of contention here for markets is, first of all, this is much weaker than anticipated. The markets were looking for 51.5. They got 50. As ever, this is done in the logic of PMIs. So 50 is neutral, neither growth nor expansion, or neither growth nor contraction, I should say, in either of these measures. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Last week, we got this disappointing bit on the manufacturing side where the pace of contraction accelerated, whereas it was expected to moderate. Now we have a similarly disappointing service sector reading, which was expected to accelerate for a second consecutive month in the growth direction. And instead, what we have is standstill, barely above 50 at all. And that, of course, taken together with an anemic and a contracting manufacturing sector, gives us an economy that has basically stopped growing on this set of indicators. And perhaps the internals here are the most striking and speak to what's going on with the Fed policy outlook and the market response thereto. The Fed, of course, has a dual mandate of price stability and maximum employment in that context. We learned from the manufacturing side that prices cooled, but nevertheless remain very elevated relative to where they've been and relative to where the post-COVID inflation shock is, which is, of course, here. In the case of services, the price structure actually continues to deteriorate in July, and we get to the fastest level of price growth since October 2022, which is, of course, right in the heart of the come down from the peaks of the COVID shock. Now, it gets worse. The employment side of things is in contraction mode, and we can see that across both services and manufacturing, not only are we below 50, that is to say employment in both sectors is shrinking, but it's shrinking at an accelerating speed. So we're getting deeper into contraction mode. And if we were to unpick the internals of this service sector report, there's really not a whole lot to like at all. Growth in new orders stalled, while the backlog of orders continued to shrink, meaning that new orders aren't coming in, whereas companies continue to work through the backlog, and there isn't anything by way of new demand to top that up. Supplier deliveries slowed. And both imports and exports of services flipped from expansion to contraction. Expansion in June, contraction in July. So all signs but the pricing structure seem to point towards slowing activity, which is how you land on near standstill here, whereas the pricing structure is pointing to aggressive inflation. And of course, this is precisely why the Fed has been leery of cutting rates. But from the market's perspective, these inflationary concerns are inherently temporary because the demand destruction from the tariffs that is fueling these concerns will ultimately overpower, and we will land on growth, cooling, and disinflation. And ostensibly, you might be seeing that already in the manufacturing side, where we've finally had a dip in inflation. And of course, the manufacturing sector is a little bit more cyclically sensitive. And so perhaps we're seeing the beginnings of that start to occur. But this is how you end up here, where the markets don't think the Fed is going to do any more than they've already projected, and they're anchoring around that. We can see there's something of a range that's developing here since the beginning of the year, with the bottom at around 50 basis points, in line with the Fed's thinking, and we've kind of oscillated between 25 and 50, one cut or two this year. And despite signs, deepening signs, as we can see here, of economic weakness, we're not really seeing us move out of this range, because the conflict between the direction of prices, higher, and the direction of employment, lower, is seen as keeping the Fed as likely to stick with what they've been saying and what they're comfortable with and no more. But the markets are increasingly seeing that this reticence is not going to last into next year because the economic environment will be so dire that the Fed will have to stop sitting around and start stimulating in earnest, which is how the markets expect to get 3 cuts next year, while the Fed has only committed to 1 so far, and even that loosely. Now, we also saw the final revisions and the final outcomes on S&P Global's version of analog PMI data, and here the view is much more optimistic. We have a surge in the service sector that continues, and in fact takes us back to some of the heady levels that we saw in the second half of last year. That, of course, gives us a potent push on the composite index because, of course, most of the economy is services. So if services is booming, then the overall economy follows. But a deeper slump in manufacturing, which has veered off in the opposite direction. So we're starting to look a bit like we did here at the midpoint of last year, which incidentally was when the markets, as we saw, had a similar sort of view, where here we can see that there was a steady view for 2026. The view for 2024 was similarly anchored, but then it was 1 year forward to look at 2025. And that's where the expansion in rate cut odds was really building, much as it is now building for 2026. Markets perceived a similar kind of a dynamic. And so what we end up with then is perhaps the markets looking at this and saying, well, maybe this is where we were at the beginning of July when the S&P survey was conducted. It was done earlier and was released earlier. The numbers we saw today were revisions. And maybe the ISM number or set of numbers is where this ultimately is going. And of course, that's the troubling part. And that's why the markets react to those, the ISM numbers today, much more so than they react to these S&P global ones. Now, even if we take this at face value and say, you know what, let's focus on the positive. Let's say this was the more accurate view, though the S&P global numbers are collected earlier than are the ISM numbers. We also got confirmation on those same numbers, final revisions across a number of other major economies. For Europe, we can see standstill, barely above 50, and indeed stuck there, stuck near that standstill as we've been basically all of last year and going into this year. In the case of China, the S&P Global and Caixin version of that data, again pointing to standstill. We have a slight pickup in services and a deterioration in manufacturing that sort of within the recent ranges gives us a net outcome that's a bit positive. And we'll take a look at what that composite landed on in just a moment. But it's not difficult to kind of put a midpoint through here and say, well, if this is pushing in this direction and this is pulling in that direction, then you probably end up somewhere just north of 50 for the composite. That matches the official numbers out of China. This is kind of their analog of what ISM is relative to at the S&P Global numbers in the US. So you get two PMI numbers, two different PMI numbers in the US. You also get two different ones out of China. You can see here the composite is basically hugging the 50 line. And that sort of reiterates what we've been seeing in China for now 9 consecutive quarters, which is a near total absence of demand. We can see here that going all the way back to where the initial reopening of the economy occurs, which is right about here. You get one good quarter into the end of 2022, and thereafter things fizzle. In the solid line here is real GDP growth. In the dotted is nominal. Of course, nominal GDP includes inflation. Real GDP factors that inflation out. And when you look at the difference then where real GDP ends up above nominal, that means that to get from nominal to real, your inflation adjustment is negative. So nominal GDP minus a negative number is the only way you'd end up with a real GDP number that's higher. And that's, of course, exactly what we're seeing. The inflation coefficient on Chinese GDP has been negative, implied, for the economy as a whole for 9 consecutive quarters. And as you might expect, when growth is positive and money and demand are chasing a given bit of supply at any given moment in time, then prices rise. And that's indicative of demand outpacing supply. That's what growth is. This is the polar opposite of that, where clearly supply is outpacing demand, which is why prices are falling. Things are essentially on discount economy-wide in China. And that speaks to the near total absence of demand relative to the supply that's available. So where does this land us? Here, by the way, is that composite number for S&P Global. For China, it's 50.8. So just about here, right in the middle of these things, as we've been saying. And even if you take the optimistic view then and say, this is the real deal for the U.S. economy, it's growing at a level that is analog to the very heady growth we saw in the second half of last year, we can see that Europe and China are basically stuck near neutral. Both are certainly growing, but the pace of that expansion is anchored at only a hair above no growth at all. And we've been anchored here for the better part of last year as well as this year. And this really is why the markets seem to be so concerned. Because if this is the lay of the land, then the one economy that cannot fail of the top 3 that drive global growth is the US economy, because there's no real meaningful support coming from the other 2. As we've pointed out frequently here, 58% of global GDP is just these 3 economies. And of the remaining 42%, most are vendors to these 3 that depend on these 3 to have demand. So the influence of these 3 is actually in excess of their size in the relative GDP pie. And so in this, the most optimistic version of the story, you have a single point of failure on global growth. And then what this suggests, and why these ISM numbers were so disappointing and so eye-catching for markets, is this later conducted survey suggests that maybe that thing you can't afford to have happen, the failing of this runaway engine and its potential to correct back down to where these are, that's maybe starting to happen. And that goes to the jobs report that we've just seen. Of course, very disappointing at 73K, but even more so disappointing in the prior month's revisions. We can see here the cumulative 2-month revision here. If you squint, you can see it's all the way down to 258,000 jobs that were in the earlier estimates that were phased out. And you can see when those kinds of revisions of this kind of magnitude occur: COVID recession, global financial crisis, the recessions of the 1980s, and of course the GDP report, which for the second quarter gives us a bunch more noise around what's going on with imports. They surge, then they fall off, and inventories, they surge, they then fall off. But it's the contribution from consumption that's the most important, because that's 68% of GDP. And these numbers are so small that between the first and second quarter this year, we get the weakest 6 months of consumption since the first 6 months of 2020, the COVID recession. And so this is perhaps why this is what we're looking at. Because the markets are starting to conclude, looking at the preponderance of data that is played out here over the course of this turn, that the U.S. economy, the one engine of global demand you couldn't afford to fail in this environment, is starting to decelerate in a worrying kind of way. And if you look at the way that that's happening, the Fed is not going to come to the rescue until the pain is far more acute, which means the economy has all kinds of room to weaken before there is action from policymakers to push us in the opposite direction. And against that backdrop, positive geopolitics, positive earnings are being ignored. And what appeared to be a breakout last week now appears to be reinforced after the bounce at the start of this week hits a wall. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, on with Chris Mondays and Fridays for Futures Power Hour, on with Chris and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Good luck trading.
What is going on, everybody, and welcome back to Risk and Reward with Ian Gus. Gus, we got another PLTR of the week. We'll be getting into a little bit of that, hash out some of the details, but it's been a pretty volatile week. How are we doing today?
Yeah, doing good. We were just discussing our favorite Soulja Boy songs before we started the stream. Everybody, let us know your favorite Soulja Boy song in the chat if you have one.
678 999 8212.
That is what it is. Yeah, we were having a little a cappella session to give the full backstory. But Catan, sorry to hear about your boat being attacked by the orcas. I guess I don't know if this is fake news or not.
I heard they're vicious sometimes.
Orcas,
petty.
well, they are. I have a whole thesis about orcas controlling the stock market.
Let's hear it.
I've never told you the orca thesis?
No.
I think I have.
You should have started with that.
Yeah, man, orcas. Okay, I've definitely done this on this show before, I think. But orcas, there's the orca salmon hat thing. You're telling me I haven't told you about this?
Orca salmon hat. I'm not catching on.
Man, yeah. Orcas, they exhibit this strange behavior where they'll put dead salmon on the top of their heads and swim with their heads slightly above the water. And scientists don't know why they do it at all. They think it might be some kind of social thing. But it's only been documented 3 times in history, and it coincides with the 3 most recent massive market crashes. There was one in '87, there was one in '08, and then also '70s oil crisis and all that. There was one in the early '70s as well. So if the orcas start wearing salmon hats, the market's going to crash. That's my theory. So I don't know how Catan being attacked by an orca exactly plays into this thesis.
Only time will tell.
The orcas are getting active is the point.
No, orcas are getting active. I hear orcas can be pretty vicious. I mean, as we get into it, the markets have been pretty vicious. It's been volatile. Last week, at the end of the week, we had a pretty big sell-off. Over the weekend, we gapped up, rallied a little bit, and then we kept on rallying today, and then we sold off again. I'm curious to see if we're going to continue to rally, but a lot of fluctuations into a lot of these positions. Anything else standing out for you?
Yeah, I mean, when Meta and Microsoft had those insane earnings beats last week, and then that still wasn't enough to, keep the market propped up the following day, I kind of thought maybe we were, starting to see the end of this rise and taper off, and maybe we would enter a much needed 1 month breathing period a little bit.
You would think.
But that does not seem to be the case. It seems like we've turned right back to push into higher highs. Earnings season has been kind to a lot of people. I mean, not so kind to others, such as the nature of earnings season. But yeah, it's an interesting one. We got some earnings trades to discuss here as we dive in.
Yeah, we'll go ahead and jump into it. We can start pulling up some of these slides. We do have a risk of the week, another PLTR on a meteoric rise. There we go.
That was good.
Meteoric rise.
You really sounded that one out. Yes, risk of the week, and then we're also going to talk Palantir. Great earnings call. I think this company is freaking fugazi, but we're going to get into it. So let's dive straight over. So first of all, kick us off with your risk of the week.
All right, guys, we got a new risk of the week. I think last time I did SPY, I still have that position on. I sold an out of the money call spread. The move that we got at the end of last week helped me out so far. We'll see if we get bought back up. That was last week. This week, I'm feeling RKT. I know RKT's been going around a little bit. It's a cheaper underlying. They're up 40% year to date. That could be a good thing or a bad thing. It's like if an underlying is moving 50%, within 6 months, that can either mean something really good or really bad. So they've been in headlines so far. Rally's been driven by a lot of bullish sentiment. I mean, some major acquisitions like Mr. Cooper and Redfin, super high short interest, maybe because of how much we've been rallying lately. I mean, last time we learned super high short interest, I mean, people like to jump on those. It reminds me of the GameStop saga. But I know we had last earnings for RKT, we beat earnings, we had higher EPS. The stock still faded. I mean, with cheaper underlyings, I mean, it's really difficult, like fundamentally speaking, for them to prop their stock up and sustain it at those levels. So I'm curious to see how they'll do. Not that we care too much about the fundamentals, but then we have some of the analysts, current price trading at about $18 for potential more upside, but I'm going to be getting short on RKT. So instead of joining the momentum and joining the herd this time, I'm going to look to buy a put. Debated on selling the call, but I think we're going to go with buying the put just in case we get a drop and we can see an expansion in volatility. So that's what we're going with this week, guys.
Yeah, I like this one. I think trying to short these meme stocks as they come back down is a wise strategy. It can be a tough one to time.
Meme stock.
If you're willing to hold through the pain a little bit. Now that was Open Door, and that thing is a freaking meme stock. As is this. I don't know. They got good commercials.
Nah.
That Rocket Money app looks lit. Yeah, you seen that thing? They advertise like crazy. It cancels your
you want to know what's
subscriptions.
so funny? The first brand deal that I've ever gotten was 4 or 5 years ago. It was a company called Truebill, right? Truebill does exactly what Rocket Money does. A year or two later, Rocket Money bought Truebill. So technically, Rocket Money is Truebill. And Truebill...
Technically, you're sponsored by Rocket Money.
No, this was... No. But it is funny how things panned out because I ended up downloading Rocket Money later on because I was curious about it. Come to find out, they're the ones that actually purchased Truebill. So looks like they might take it to higher heights. But when I heard Rocket Money, I was like, that sounds familiar, but there's no way this is... I think I have Rocket Money on my phone right now. And I think I'm paying for it. I think I have a subscription to Rocket Money. But anyways, we're going to go with Rocket Money.
You better cancel that thing if you want this to come back down.
It's actually pretty cheap. You know what's cool about Rocket Money? If this is the same...
Bro's going to endorse the company. He's going to say, I'm short Rocket. And then just give a glowing endorsement.
So I do have it downloaded, but it needs to be re-downloaded from the iCloud.
Sure, where it does like the auto
and then you get to choose what's kind of... This is not at all, but you gotta choose what you want to pay monthly for it, which was a very different model than I was used to seeing any company incorporate. So I wasn't choosing Rocket Money because I've seen it before, but when we keep talking about it, I'm like, yo, I have used this application before. So it's been moving off of a lot of momentum, a lot of speculation, but we're going to be getting short right now. So
yeah, love shorting the memes. It's such a great thing to do. You know that these companies
eventually
must return to their fundamentals sometime. Yes, you will be validated, especially if you're willing to hold through a little bit of pain. It works. I don't know if I've told this story on air before, but when GameStop, the OG original GameStop saga, I wanted to short it on the way back down, and I did it, and it got too painful, and I cut my losses, and like the next day it came crashing back down. I would have been up so big. I lost like $900 very valuable dollars my freshman year of college. So yeah, I'm with it. Short these memes, baby.
Yeah, no, I mean, I feel that completely. I mean, when you see like your net worth fluctuating like that, like me in college too, bro, that was me. It's like a $200, $300, $400, $500 loss. It was like, All right, where do I?
Yeah. I guess I'm having ramen again for dinner. Yeah, exactly.
No, but that's going to be my risk of the week. We'll see how Rocket Money pans out. We'll see how. All right, we'll see if we can sustain some volatility.
For sure. Let's jump over. My risk of the week is DoorDash. I believe I put this on as risk of the week a few months ago, and I got long. And I still really am a buyer of DoorDash in the long term. However, based on their recent price action, I just think that this thing is really overinflated right now. I mean, a killer trade after their Q1 earnings report. It took a dip down into the 170s. I took a spread. I needed 170, and it has just ripped since then. I actually wish it was a naked call. I was just telling you that the other day. But it's up 50% this year. It's up 35% just since the start of May, which is about when I entered that position. Fortunate for me. The run-up is justified. They've made smart acquisitions. They bought 7 Rooms and Deliveroo, which were the two largest UK food delivery services. They also operate in Australia and a few other places. And I really like those acquisitions. I think it bodes well for global expansion. And I'm really playing more into what I think the market is going to do rather than what I actually think DoorDash is going to report. I don't have any opinion on whether I think DoorDash is going to meet, exceed, fall below expectations. But the last earnings call was very bullish. They beat EPS by a lot. Revenue came in on target, and they announced that they had spent over $5 billion on these 2 big acquisitions, all cash, no recurring payments or anything like that. And the stock slid 12% on that news. That was why I entered the original position, was because I was like, wait, this is bullish news to me. I don't understand why the stock is sliding. And since the market has priced in my sentiment on that one. But now we're at this incredibly overextended price point, in my opinion. It closed at about $255 today. Analyst price targets hang at $212 to $240 right now, and I don't put a lot of stock in that, but I think that is a good reflection of the broader sentiment that I can't even find one analyst saying, oh, this thing's going to go to $350. And these recent acquisitions are going to hurt their short-term margins, and I think the market is going to overreact to that. I think that is something that should totally be expected and be priced in, but DoorDash is going to come out and say, oh, we just spent all this cash, so we're coming in a little bit tighter on capital than we thought we would this quarter, and that people might overreact to that. I think, like I said, I buy into the long-term thesis of DoorDash. I think that this company is only going to grow. I'm an avid user of DoorDash myself, but just in the micro here, and this is incredibly binary. My contract expires Friday. I want to isolate this binary event and do nothing else. I'm define risk. I bought a put spread, and yeah, I think it's overextended to the upside. I think it needs to breathe. I think the market really wants to push this thing down, and I think they would have to blow every expectation so far out of the water for this to take any sizable move up. So feeling pretty good about my position there. I need it below 250 is my critical number.
Yeah.
So
no, I like it. I'm always curious to see how the company acquiring the company, how they pan out, like in terms of the response from the underlying stock, and then also the company being acquired. The reaction from their stock.
I always think it's interesting, and especially when and this was a rare time with those buyouts where I just wholly disagreed with the market action. Usually I can find the validation, but not only do I think that they're strong acquisitions that will make them a lot of money in the future, but also they had $5 billion in cash laying around. Is that not a sign that the company is doing pretty well? I mean,
or healthy in the time being at least. I mean, I know one thing. So what's funny is, I know with a lot of small caps, I used to really love watching the mergers, the acquisitions, things like that. Something I noticed was a lot of the times the company buying the company takes a little bit of like a temporary hit, because I mean, they just forked out a ton of cash. So they take a temporary hit for a potential investment on their money. So I really like to see kind of how the company being acquired, if they get any type of short-term momentum.
And I think the acquisitions thing is so interesting, because when Amazon says we're making a multi-billion-dollar expansion we're going to spend billions of dollars to build distribution centers in the UK, everyone's like, awesome, and Amazon goes through the roof.
Right.
But then DoorDash says, oh, we're going to spend billions of dollars to buy our 2 biggest competitors in the UK, and for some reason it tanks 12%. It's strange.
That's valid. I guess I could kind of see Amazon and DoorDash low-key on a different playing level too. I kind of see Amazon more of like they're so unfair. I see Amazon as like literally every industry now. So I see Amazon I wouldn't be surprised if Amazon has their own DoorDash system in the future.
They do groceries now with Whole Foods.
Okay, so I guess there we go. It's like a direct competitor there. But yeah, very interesting. We'll see how that kind of pans out. But I do like Dash. What is that trading at right now?
Yeah, we will see. Yeah, I think it closed just over 255 today.
Okay. There.
Yeah, so it's on a tear, and I think the tear will continue. I'm looking to get back long into this after this, especially if my trade is correct and a good buying spot presents itself. But I just don't see any way they can make higher highs.
Yeah.
That leaves
Give up on the small cap. Small caps. Those are pretty poor fundamental companies, no doubt. I think it's stocks under $10 is technically considered a penny stock, and I think 90% of penny stocks end up filing for bankruptcy and getting delisted off of the NASDAQ. So
let me tell you about a little company called Aerotine International.
I didn't even mean to. That's funny. We can go ahead and jump to the
only thing you're going to regret, Aerol, is that you didn't buy more. All right, let's dive over. That leads us straight into our primary segment for the day.
Awesome.
We've lost slides here. My apologies. We'll hop back over. Leads us into our primary segment for the day, which is Palantir. Palantir, on an absolute tear. Everybody, if you're a trader, you know the name Palantir by this point. 340% gains last year, up over 100% this year already. This thing just keeps going. They just had a very profitable earnings call today. Yes, today. And they moved up another 8%. And so I just wanted to take a second to talk about Palantir, who they are, what they do, and if this move could possibly be justified. So, a few quick numbers here. They're absurd numbers. Palantir is trading at 295 times their forward price to equity, and they're trading at 661 times their trailing price to equity. This is insane. That makes it the most overvalued large cap stock in the United States by the definition of overvalued. There is nobody that is trading at a higher forward PE ratio than Palantir. They went up 340% in 2024. They went up 130% in 2025, but they somehow have done all of this and increased their earnings and their margins with no matching increase in employee headcount. Now, on one hand, that shows scalability, for sure. It shows that you're able to do more than everybody else with less than everybody else. But the contrarian point to that is that this company, their market cap is so ridiculously much higher than anything they could feasibly do anytime soon. It is absurd, and it's trading purely on hype, is what it is. And anytime you see something trading in the triple digits of their forward PE, fundamentals have gone out the window, and we are talking pure hype. So it's just this really interesting situation to me, because logically you would say, oh, well, eventually this hype is going to die, and they're going to have to be evaluated by their fundamentals, at least to some degree. But we've been doing this for years now, and it just keeps happening. So I don't know. I don't know. What are your thoughts?
I like PLTR. I think the momentum is going to continue. I think outside of the fundamentals, I think PLTR, the train isn't done. And with the fundamentals, PLTR was one of those that have been around for a while. I think PLTR was the first or second underlying that I think I ever placed an options position on. So in terms of the fundamentals, I'm excited for it. But I'm more so hoping that the momentum continues to the upside.
Yeah. So let's talk today. You can take us away.
Cool. Now we got a strong Q2 earnings for Palantir, raised profit forecast. We had that on Tuesday, here Tuesday. Estimates are looking good, revenues are looking good, the stock reaction, boom to the upside. We gapped up and ran a little bit more to the upside. That's showing investor confidence, in my opinion. Not only are we getting a pretty big gap up to the highs, but we're still continuing to run to the upside. And then we closed green on the day. So it doesn't seem like the sentiment has shifted at all here. If anything, it seems like it's only continued, but now it's kind of harder to get involved because now we're trading at these extreme levels to the upside. But they did have a solid Q2 earnings beat. And PLTR, it doesn't seem like they're slowing down anytime soon.
Yeah, it really doesn't. And in a vacuum, a considerable beat on a percentage basis on your EPS, exceeding revenue. I don't think that, in a vacuum, I don't think that these numbers are unjustified for an 8% move. I think that is sensible. I'm not upset about it, but it's just, we continue to trade just so far ahead. And I don't know, it's like, with the way that we're treating this thing, we're acting like they're going to put the first man on Mars or something. With
how discreet they are, sometimes they might be.
It's true.
That's what I'm saying. Some of their filings, it was a little vague, especially 2, 3, 4 years ago.
I ain't giving my money to the mystery man. Are you kidding me?
If stock go up, we going up.
If stock go up, but stock go up on
absolutely.
It's so far 100%, from justified. 100%. It's so far from justified.
Right. How would you consider it? Just position sizing? How do you get involved in this?
I don't.
Right.
I don't. I feel that is the safest call for me. Is I don't, because if I got involved with this thing, if I were to get involved with this thing, 20 times over the last 2 years, I would have said, today's the day. Yeah. This thing is overvalued. Yeah. It has to come back down. I would just be shorting the hell out of this thing, getting my lunch handed to me day after day.
It's real though.
Yeah. So I keep my hands off, but it's just so interesting because I think that a Amazon, I think that a Tesla, these companies, and I really mean Tesla by proxy of SpaceX or whatever. When you buy Tesla, you're buying Elon. That's something we've established on this channel before, but. I think an Amazon has much more propensity to like take over the entire world in the way that we're acting like Palantir is going to. And the reality is that they only made $1 billion last quarter.
I agree. I mean, they do not have even close to the facilities as Amazon does, and not actual facilities. But we'll go ahead and jump to the next slide here.
Yeah, let's hop over.
Some strategic initiatives. Is it me?
Yeah.
We got a lot of.
Go ahead.
We got some strategic initiatives. We got a lot of AI. AI still seems like it's the buzzword, but at this point, it's not even just a buzzword. It seems like AI is something that these companies are taking very seriously, especially with something like PLTR. So we have here their goal is to deploy AIP to about 85% of its existing clients by Q4 of 2025. That's a pretty big push, right? They got a lot of goals for the end of this year, which is. We're already into the 8th month. We got 4 more months.
And it doesn't matter if they meet these goals. They're just going to keep going higher either way. Yeah.
Apparently. The plan includes launching industry-specific AI agents and cutting deployment time in half. So, I mean, efficiency. I know the best way to get efficient at anything is systems. And then a system will allow you to be able to scale whatever you need it to. So I know they're consolidating a lot of their files, a lot of their data. I know that's one of the last bullet points there. Didn't mean to pull from the last one. But they're looking to scale. Whenever I see them getting systems down, cutting here, it sounds like they're making room to scale for what they didn't have room for already. So analysts expect the platform expansion into a new enterprise in 2025, potentially lifting guidance. So if they get those guidances lifting those guidance, we could see more positive outlook from PLTR, especially headed into the new year.
Yeah,
they're not even going to care about if these goals are met by the end of the year if this sentiment, because the market is moving off of vibes sometimes. It's just feeling
especially with this stock. I mean, this is the most vibe-driven stock in the market right now. I mean, by the numbers, that's the case. Yeah, and I agree. I mean, I think they absolutely do have the scalability. They're doing great with their AI integration, and they are trying to integrate AI into spaces where I think it makes a lot of sense that I don't know why other people aren't focusing on, like we talked about with Surf Air, and the whole reason people are amped up about Surf Air is because the AI that Palantir is developing for them could potentially be applied to all air travel and air traffic control, and that would be this huge earth-shattering thing. But yeah, it's just, I don't know. It's really hard for me to buy into a company that is trading on vibes this much. It's interesting, but yes, legit.
What do you got to say about the SPY, QQQ? Sometimes I feel like SPY and the indexes are trading off of vibes sometimes.
I think that's true, but I don't know. I mean, that's at least an aggregation. Nobody, I mean, there are people that obviously, I mean, I do it, buy and sell SPY and QQQ, but that is, SPY and QQQ largely serve as a reflection of what is happening across the entire market. And any individual.
Are you saying our economy is moving on vibes? I don't know if you know Kyla Scanlon, not a little plug, but she's great work, fundamental economist kind of person, and she has a lot of great content out. And she made a piece one time talking about how the economy is moving on vibes. And from then, it stuck with me. I was like, we've been using the word sentiment. That's an old word, but the young generation word is vibes.
Well, yeah,
like we have been moving.
We talk about the market moving on vibes all the time, and I mean, the whole economy kind of has been moving on vibes ever since our deficit entered the trillions, and we just continue to function somehow. Nothing is real, but yeah, it's an interesting one. But the military contracts are legit, and let me be very clear: I don't think Palantir is a bad company. I don't think this is a company that can't be successful or can't grow. The share price pisses me off. The market cap pisses me off. All right, commercial partnership and diversification. I just alluded to the Surf Air partnership that we've talked about previously. Also partnering with, is it Sauer, S-A-U-R? I don't know, Sauer Group. Deploying AI for complex management using their Foundry. Their Foundry is a big deal. If you try to research Palantir, you will see the word Foundry 100,000 times, and then eventually you have to cave and Google what is Palantir Foundry.
Wait, what word again?
Foundry. Oh. That's what they call their systems, their AI. What
is it called?
Foundry?
Oh yeah, just say it one more time. Foundry. Just drill that in.
Yeah. No, I'll forget. Anyway, Fedragoni, that's recent, as of June, this quarter, integrating AI tools to revamp their manufacturing and supply chain operations. TWG Global, embedding AI into financial and insurance workflows. And again, I understand that if you are buying Palantir, you are buying AI to an extent, much the same way as NVIDIA was for a long time, and still is to a degree. And they are providing all of these solutions to people. I think that all of this is very promising stuff, and I think that AI solutions and workflows are definitely going to be the future of business. So I think that there's a very, very strong market for this, and I can see the bullish case. I just can't buy into it.
100%. Clearly, as we know, Gus is definitely not getting long PLTR for the rest of the week.
I am this close to going on a Bill Ackman Herbalife situation with Palantir.
Bill Ackman Herbalife.
But I'm not gonna.
Starts going in on PLTR. PLTR is scared of Gus. See, don't put out any hit pieces against us. No, anything else to add before we hop on out of here today?
Yeah, no, I got nothing else.
Cool. Well, we got Rocket Money, we got DoorDash. We'll see how that pans out the rest of the week.
We're short both, right?
I am short. Yeah. Got some more short delta on into the portfolio. We will be back here live 4:30 o'clock Central Time. Love you. Appreciate you guys hanging out with us. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Markets down a little bit. It's Tuesday, August 5th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan.
That's
right.
right.
That is where you are. Here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're watching on the platform, Tasty Live. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome. Come over to YouTube. Tell us what you think of this action. What you think of this market that declined after this morning's PMI services report. U.S. economy stagnating a bit, growth coming in, employment falling off, prices paid, highest level since October 22. Not a great sign for the largest part of the economy. Bond yields up and down across the curve, a little bit of a twist with lower yields at the longer end. Gold and silver able to take advantage of that and climb back from some recent losses. The dollar holding ground, not great, but oil prices drop. And so I suppose that's good news to the Russell, which is the only index that's able to eke out a gain today, up by 0.65%. Otherwise, the NASDAQ is off by 0.65%, the S&P down by 0.45%, and the Dow Jones with a more modest 0.13% loss. Dylan, you the ever optimist here, give us the lay of the land. We were just critiquing the Godfather himself, Mr. Sazonov, for being a little bit too public in his opinion. But you seem to think that it's okay to be public these days.
So how do I contextualize this? I would describe today's sell-off at a high level as bullshit.
Okay. Well played.
I like it.
What I mean when I say that is that the underlying thesis that I assert is that the overwhelming force that is artificial intelligence, and please forgive me my colorful language, I shan't make it a habit, but I felt it was appropriate at this juncture. I believe that artificial intelligence is an overwhelming force. And I believe that any pullbacks on sort of pedestrian economic concerns of the likes of those who may have left Russia in their youth for the glorious life of the music festivals of Portola.
Happily, so happy.
With great joy and effervescence, I have no doubt.
Oh,
for the sweet smell of eucalyptus and sourdough bread.
Boundless love for all these things.
But regardless of the glory that they may enjoy on the hills of Portola as they partake of the sourdough and eucalyptus, they still hold an inappropriately pessimistic view of the world as it is portrayed in financial indices. And the reason that they do that is because they look at the world through some basic, practical, pragmatic, analytical framework, which is a source of comfort for them intellectually because they're very intelligent. But their intelligence in this particular instance is a massive liability because of the overwhelming, excuse me.
I love this.
I'm speaking, if you don't mind. Because of the overwhelming enthusiasm and abundance of glory that awaits those who choose to think less and rather enjoy the optimism of the unlimited potential that is a technological revolution that makes the emergence of the internet in 1995 or 94 or 96 or 97 or pick your year in the 90s look like that of a flea upon a horse's ass. because the transition to artificial intelligence is a moment of historical revolution, the likes of which we have never seen before. And valuation is irrelevant. Basically, a blind monkey could select any of the AI adjacent or directly related names at any price point, and a year from now will make much more money than any fool who attempts to use their intellect, let alone their analysis, to try to trade this market. And that, dear Mr. Vecchio, is what I think on this particular day.
If ever there was the signpost of a market top, by the definition of what a bubble surely is, which is the disconnect of reason and valuation, that was as eloquent a statement of a sentiment peak as certainly I've ever heard.
Well, thank you for your complimentary commentary, which I shan't take with any subtext of side insult that I think was there.
Well, you've been right.
I shall ignore.
There cannot be subtext, because until this thing pops, you're right.
If I might refer to my dear friend and perhaps your neighbor, former Fed Chairman Alan Greenspan, the markets, good sir, can remain irrational far longer than you can remain liquid. I'm not sure. That might be that's
a Keynesianism, and
it's not really a Keynesianism.
It's solvent, and it's not even. It's debated as to whether it's
anyway.
A
Listen, whatever. Okay, listen. You get my point.
Yes. Well, and
Vecchio's the citation.
And we've
I'm not here for quotations and citations. That's Vecchio's job. I'm here for a point of view.
And
listen, he's not the nerd.
To your point, that's exactly what we've seen. We have shown the markets.
That is where we are, sir.
Rational
I would tell you this: you can either be long the AI, you can either take advantage of these idiotic sell-offs. So like, oh my goodness, look at this economic data. What about the PMI? What about the CPI? What about the jobs report? Oh, what about the overwhelming global technological revolution that renders your stupid economic data irrelevant? Good sir.
It doesn't make it irrelevant if you just look at the collective wisdom of the world's largest and most liquid stock market today. It's not me saying it, it's them.
0.4% between friends. It's basically a tip at dinner. Okay, come on. This is not a sell-off.
I mean, in the context of what happened last week, it's a beautiful rejection of yesterday's attempted rebound in exactly the place you'd want it.
Your adjectives are unwelcome. There's no reason to characterize its beauty and or lack thereof.
I'm going to go get the doll, and you're going to let me know where Ilya hurt you today. Okay.
Show me the dollar. What happened with that stupid dollar? Trump.
23,132 on the NASDAQ close. We're up a little bit after hours, back to 145. It's a 0.65% loss. We turned lower from where we more or less bottom out on July 30th, Ilya. Slight overshoot from some of the levels that we were looking at yesterday on Futures Power Hour and overtime, roughly 23,000.
Basically the bottom of that range.
Yeah, 350. S&P was 63, 65 or so.
Mm-hmm.
And we failed there. I think the reason and rationale for why we actually did pull back and fail away from these levels when we did this morning is worth looking into. You were mentioning the ISM PMI report, which I think is worth bringing up here on the screen for a quick second. The PMIs, as we often do when we discuss these, diffusion indexes based around 0. If you're above 50, you're growing. Higher above 50, growing faster. Below 50, contraction, faster the more you are below 50. So the ISM comes in at 50.1, which is barely in growth territory, if at all. But it's the internals that bother everyone, because the internals, as we look across the board, not only are they mentioning tariff. In fact, let me just search for the word tariff here on the screen. 1, 2, 3, 4, 5, 6, 7 mentions in there. What respondents are saying section. Basically, every response has a tariff notation. It's the fact that the employment gauge is falling deeper into contraction territory, and our prices paid index is now at the highest level that we've seen since October 22. which again, respondents are pointing to as the tariffs being responsible. So what does this tell us about the state of the economy now that we can no longer trust BLS data, as Dylan mentioned in his walk and talk rant this morning on Twitter? And are we now looking to the PMIs as our North Star?
All the data is bad. Anyway, sorry, go ahead, Ilya. Sorry.
All the data is bad.
All the data is bad.
We already said this yesterday. We already collectively agreed we're using bad data, but we're agreeing to use bad data because it's mutual agreement.
Yes. I think there's an interesting dichotomy here, and you have to give the devil his due.
Thank you.
There were two things that happened.
Assuming that was directed at me.
There was two things that happened today. And you can pick and choose your data. There was the PMI numbers from ISM, which we're looking at here, which were god-awful and disappointing across the board. And indeed, the manufacturing component of this same survey that came out last week, that also disappointing. And you can look at that, and those of us of the bearish mindset can go, see, told you, ha, ha, ha.